the particular assets of the corporate debtor. If at all wrong valuation, whether it is a low side, then automatically number of stakeholders will suffer a lot. To avoid that one, we have to value the assets properly by empaneled or by taking the services of the valuers. So the competency is very much required, whether it is a land and building or plant and machinery or the particularly securities valuation, etc. The competency is required, experience is required, and the knowledge of that particular valuation is also required. Otherwise, the CIRP process will become a big challenge and a problem also. And we are talking about the preamble of the IBC is value maximization, value maximization. Value maximization is depending upon the proper valuation of the assets of the corporate debtor. Okay, if at all the corporate debtor is not having any assets, all are eliminated before CIRP, then there is no problem. But here, if the company is on going concern, 50% of the CIRP cases going concern, remaining 50% on account of various issues, by the time of a CIRP, no assets are available. So here assets means not only the fixed assets, the intangible assets, the current assets, all are to be properly taken into consideration. And for that, some financial knowledge is also required for the insolvency professionals. Various claims submitted during CIRP. The admission of the claims and the accurate constitution of the court. Once the claims are properly admitted, suppose I have taken one financial creditor, instead of 100 crores, I have taken 50 crores, means his particularly the voting right will reduce by 50%. Instead of that 100 crores, I have taken 50%, means whatever the percentage of voting right in the COC is there, 50% reduction. So that's why on CIRP commencement date, the exact valuation of the claims are very much required. Not after the CIRP commencement date. On the deadline or the benchmark is the CIRP commencement date. The admission and verification of claims constitute one of the most significant responsibilities of the interim resolution profession and the resolution profession during the CIRP under Insolvency and Bankruptcy Code 2000. Admission and verification. Once some of the claims not eligible for admission, I have seen also some of the RPs, instead of identifying them as an operational creditor, they are identifying them as a financial creditor, which the total system is completely the reverse. Instead of the particular claimant to be identified as an operational creditor, if at all I admitted as a financial creditor, the COC formation is wrong. So the admission and verification. Verification means simply not the document, the history. Particularly when take for example, raw material is there, operational creditor is there. Simply operational creditor not depending upon the bill of exchange that is given by the corporate debtor to the operational creditor, and that is a trade transaction. That too, simply accepting the claim based on the bill of exchange is not the criteria. The enclosed documents for the bill of exchange is, first one is the purchase order. Whether the purchase order was happened or not. If the corporate debtor given the purchase order to the supplier, that is the first document. Second one is raising the invoice by the operational creditor who supplies the raw material. The invoice, in the invoice also, the GST is also mentioned. If at all old, the particularly stocks, VAT is also there. Whether it is reflected in the GST returns or not, some of them are fabricated the invoices also, GST return. Next one is once the goods are sent to the corporate debtor, normally they will supply the goods by way of railway receipt, by railway wagons or lorries or air sometimes or the ship. In case of lorry, LR, lorry receipt, that is a Xerox copy to be attached. And if at all it is supplied by the railway wagon, railway receipt, or if at all it is supplied by ship, the bill of lading. If at all the goods are supplied by the operational creditor, particularly the imports, and definitely if the ship facility is not there, airway bill of lading. So after that, once the goods are received at the gate, the goods received, the gate register, all are available in the company itself. You need not verify. All these things are provided by the supporting staff to you. And once you are habituated like that, the accuracy will increase. Once the goods are received, noted to be prepared, then the goods are sent to the particularly stores. The storekeeper will verify whether the same quality, same size or not. Then only he will enter into the stocks register and he will give the acknowledgement for goods also. Then that amount, that particular transaction goes to the accounts department for payment. And once the payment is happened, then it will be reflected in the bank statement. So this is the total process. But if at all some process may not happen in some companies, but as a resolution professional, you have to verify. Particularly ABC, the highest or big transactions. If at all crores of rupees is there, simply based on one invoice is not suffice. Fabrication is also happening. All these things are to be tallied with the particular books of accounts of the corporate data. Suppose the books of accounts of the corporate data, the supplier, the creditors, he will mention 20 crores. But whereas the invoice claim is 100 crores, you have to reject. Because as per the book of accounts, it is only 20 crores. But whereas you raised the claim for 100 crores, immediately that is to be returned by making suitable remarks, and that is to be properly filed for future reference also. In case of any disputes are arising, these particularly notings and all these things are useful for clarification. So the admission and verification of the claims constitute one of the most significant responsibility of the IRP or RP during CIRP under the IBC. Okay. The correctness of the claim verification directly determines the constitution of the Committee of Creditors. The correctness of the claim constitution. If at all, earlier I told 100 crores are to be admitted. But I have admitted only wrongly 50 crores, not by verifying, simply on my judgment, I have admitted. So I am the financial creditor. If at all he is a financial creditor, normally he will not accept. He will not accept. And he will raise the issue to the NCLT through IA. So in that particular case, what you have to do, verification of the claims proper. Otherwise, the constitution of the Committee of Creditors is wrong. Voting of the financial creditor, participation in the operational creditor, ultimately the success of the resolution. Once I have given X voting right, I have to give X voting right, but X by 2, if at all I have given, then the voting right will reduce, and the insolvency and the bankruptcy code. Read with the IBBI, insolvency resolution process of CIRP regulation prescribed different categories of creditors, different categories, and a separate claim forms for each category. They have defined that is available in a IBBI website. The claim forms are all forms, the standard forms are available for CIRP or the liquidation or the voluntary liquidation or the personal guarantor to corporate debtor or the pre-packed insolvency resolution process like that. So the standardized forms, if at all any modification is there, they will upload you use that forms while giving the advertisement also. And every creditor is required to submit the proof of debt with the prescribed time. That is also required. If at all he is out of the particular this one, then we have to refer the issue to the COC as well as to the NCLT, whether to admit or not. So even though some of the particular creditors, they may not aware of the advertisement, they may not aware of the particular information provided in the website, etc., etc. So for that, what you have to do immediately, particularly this straight away, we should not reject. And we have to tell to this one, this is the last date. Beyond that, this is to be approved or authorized by none other than the COC as well as NCLT. The IRP or RP verify the claims based on documentary evidence and book of accounts, records maintained by the information utilities, the bank statement, the statutory records, the contract, and judicial orders wherever applicable. Sometimes judicial orders are there. Take for example, a workman compensation is there. That is a claim that is not paid by the corporate debtor before CIRP. And the court given order, the workers association leader, he has enclosed the particular order of the claim, workman compensation under Factories Act, etc., etc. All these things, even sometimes judicial orders are also there. Take for example, GST or income tax. If at all the appellate authorities or judiciary authorities of the IT or GST, they will also give the orders. You have to pay this amount like that, and they will claim that amount only. Particularly the GST or income tax authorities. So that's why the judicial orders, order is important. Whether the order is genuine or not, you have to verify from the concerned websites of the particular government departments also. The Supreme Court and the NCLT have repeatedly held that admission of the claim should be based on credible documentary evidence. Credible the agreements, documentary evidence, and not merely amounts claimed by the creditor. One of the RP interacted is my friend. Was how many claims you have received? 4 claims. Have you verified with the book of account? No, boss. Simply I have received four. I have prepared the statement and submitted, and COC formation. If at all financial creditor, COC accordingly I have formed a CA. No, boss. Once whether it is a genuine claim or not, whether they have fabricated or not, whether that claim is there in the books of accounts or not. If the books of accounts are not available, some other sources. Take for example, raw material supplied, even books are destroyed, books are not available, at least the GST returns of the company. In the GST returns of the company, or earlier VAT, all these things are there. And still, what are the evidences that are available? What is the purchase order? All these things are to be verified carefully. Otherwise, later on, it creates a lot of a problem in handling those cases. This is the main or heart of the CIRP process. Once the claims are admitted properly, or checked properly, or verified with available records, verified with the books of accounts, verified with the statutory returns that are filed by the corporate debtor, then it is the problem will not arise and you will not face any problem also. Objectives of verification of the claims. The claims are to be verified. What are the objectives? Why the claims are to be verified? And if at all your involvement is not there, then problem will arise. The problem will arise. Your involvement 100% is required in a claims process. What are the objectives? The verification of claims serves several important purposes. We enable the resolution to determine the total liabilities. How many liabilities? For preparation of information memoranda, you have to give the correct amount. If at all you have given the wrong amount information memoranda, then the prospective resolution applicant agreed that liabilities, then he will restrict it to that only. Later on, if at all any disputes and court orders, all these things, lot of problems will create. So that's why the total liabilities are to be arrived properly. The total liabilities, the books of accounts, the balance sheets, the profit and loss account, and sometimes the funds flow or cash flow statements also of the corporate data. Identify the various categories of the creditors and the constitution of a committee of creditors accurately. And even 1% difference or 0.5% difference also create a lot of problem. Determining the voting right of share of the financial creditor. Prepare the information memorandum. Ultimately, of the constitution of the creditor, this data is valuable data for preparation of information. If at all it is low, then automatically the PRA, prospective resolution applicant, tempted to acquire that company with a low value. And later on, the stakeholders, this is not admitted, that is not admitted, this is wrongly admitted. All these things they will tell. So, to avoid that type of situation, the accuracy is very much required. Ensure the equitable treatment of creditors and resolution plan, and facilitate liquidation if required. And even the liquidation also, the same will happen. But in the liquidation, up to liquidation date, they have to revise the claims also. So, equitable treatment of the creditors of the resolution plan and facilitate the liquidation if required. And the statutory framework. Sir, are you getting my point, sir? Sir, are you getting my point, sir?
Yes, sir, we are getting.
Yes, sir. Yes, sir.
Statutory framework. Because so many areas are there in claims verification. In detail, I will thoroughly discuss about all the various types of claims. Statutory framework also. For this claim verification process is governed by the primarily the IBC code, the insolvency process for CIRP regulations, section 18 and section 21 you have to verify, and that is relevant to the claims and 24, 25 and 29, 30 and 38, 53 and regulation 16214 and regulation 16A, 17 and 18. All these things you go through that one, and accordingly the claims are to be admitted properly. So section 18 and 21, 24 and 25, 29 and 30 and 38 to 53 and regulation 6 to 14 and 16A and 17 and 18. Categories of the claims. Different categories. Financial creditor, class of creditors, operational creditor, home buyers, and others are also there. That also I am going to discuss that one. Different categories of the claims submitted during CIRP. All claims up to last rupee, we have to correctly arrived the claims admission. Claims generally fall into the following categories. Financial creditors, normally when the company is getting some funding from the banks or NBFCs or trustee financial creditors, they will get some amount. And operational creditors, those who are supplying the raw material, services also, like electricity, even cost accountant, chartered accountant, company secretary, those who are providing services to the company for various audits and other things. For that also, the operate there comes under this one, employees, their salaries and wages, that also to be taken into consideration. Workmen salaries, that is as in liquidation also 24 months, and employees 12 months. Government authorities, particularly the government direct tax or indirect tax, or any the pollution, the renewals of various licenses, or any taxes to be levied, or property tax, or particularly the employees, whenever they are working, they have to pay some professional tax like that. And home buyers, and financially in class, and depositors, the fixed deposit company acceptance rules, and they, as per deposit acceptance rules of the company, can mobilize the deposits also from the public, minimum 3 years, and like that. And if at all that is not paid, the depositors, debenture holders, the company is borrowing fund from the public, that is debentures. They are having a floating charge on the company asset. Charge is also there. In case the company is in the problem, the floating charge will become fixed charge. So whether it is a debenture or charge holders or not, that is for debentures, trustees are there. Trustees agreement also you have to verify, and bond holders. That is also one type of a loan that is borrowed by the long-term funds to meet the capital expenditure of the company. Bond holders are there. Security receipt depositors, and sometimes they will give the security, or the security also for the advanced payment, etc. Creditors and guarantees, and contingent creditors, arbitration award holders, and decree holders, and statutory authorities. And in this related, unrelated, both are to be segregated. Other creditors, all these types of the generally the creditors will fall into that various categories. Now each category follows a separate procedures. There is no uniformity. The form is different. The verification of a books are different. Where it is available, and what are the various documents for that particular liability to be verified. All these things are separate procedures are to be followed. And particularly the financial creditors. This is a major portion. Or if no financial creditor, operational creditor may be the major portion. If the company not borrowed either from banks or NBFCs, or the bond holders, or the debenture holders, even debenture holders are also financial creditor. Bond holders are also financial creditor. The fixed deposit holders are also financial creditor, and home buyers also the financial creditor. But there comes under the class of creditors, under another group, they will appoint a representative for a class of creditors representative. So the financial creditor to be submitted the claim in Form C. A financial debt is defined under Section 5, subsection 8 of the IBC, includes money borrowed against payment of interest, the loans from banks, financial institutions, debentures, bonds, lease liabilities having commercial effect of borrowing, guarantees invoked in derivatives transaction. Even particularly the derivative transaction, the risk mitigation products like future contracts or forward contracts, or swaps and options. If at all any foreign exchange transactions are there, companies are going for the derivatives. The derivatives are like forward contracts, future contracts, swaps, options, etc. That is also financial creditor. So that's why whenever you are going to accept that particular financial creditor transaction, if doubts are there, go through the section 5, subsection 8, the classification thoroughly once or twice, then you accept. Suppose that the company has a booked forward contract with the bank. because the exchange volatility is there. So the company has to the promise to sell some the foreign currency bills, export bills or import bills. For that, they have booked forward contract. So if price volatility is there beyond that particular contract, the bank will bear that amount. So on due date, whatever the difference amount is there, that is to be paid by the company. And beyond that rate, the bank will bear the amount. So that's why the form C is also very, very important. So here the option, the forward contracts, future contracts, companies are also where foreign exchange transactions are there. They will book the contract through stock exchange like NSC, BSC. The same foreign exchange volatility, but that is a fixed one. It is a tailor-made. Banks are tailor-made like options or swaps, etc., etc. Types of financial credit. So the financial creditors are scheduled commercial banks. They may borrow from public sector banks. They may borrow from the private sector or foreign banks. They may borrow from NBFCs, non-banking financial companies also, and the financial institution. And they may borrow, even direct finance will be happened through Small Industries Development Bank of India, or some companies, agro-based companies, or some rural-based companies, they will borrow, particularly the rural electrification and all these things. If at all the company is provided, then the NABARD or solar energy, all these things, the NABARD or rural infrastructure also. So the NABARD is also directly financing to some companies, and exports and imports. And some companies, instead of borrowing the exports and imports finance from the commercial bank, they will borrow from Export Import Bank of India and bond holders. Bond holders is also if the unsecured the financial creditor, and that is also financial creditor. For that, a class of creditors are there. Debenture holders. In the debenture holders, trustee is there. Trustee agreement is there. Trustee the agreement to be finalized by Securities Exchange Board of India. And the debenture holders, secured, unsecured is there. Secured means the floating assets on the company assets. And once the company is not paid, the floating will become fixed charge. And if you go through the trustee agreement, then you will get a good idea about the trustee agreement. And the mutual fund companies are also, they are investing in some big companies for on behalf of the unit holders. And asset reconstruction company, banks are selling the non-performing assets with assignment agreement under Surface Act 2002. They will sell to the ARCs. ARCs also, they are the financial creditor. And nearly 25, 22 or 23 ARC companies are there. Even if you wish to empanel the either IRP or the RP or liquidator, whatever it is there, you can the registered or empaneled with asset reconstruction companies. Asset reconstruction companies are called NBFCs and regulated by the Reserve Bank of India. The list with addresses and email all are available in rbi.org.in website also. If at all you want to empanel with ARCs, send your resume directly to that particular email. And all these things, particularly these are the financial creditors. Financial creditors are not only the banks. Even if at all any person has given any loan to the company with a promissory note, etc., they are also comes under financial creditor. And in financial creditor, you have to distinguish between related, unrelated, and documents generally submitted. Once the loan is taken by the corporate debtor, they have to provide, they have to execute some document under Indian Contract Act or a Transfer of Property Act. different acts are also covering. Suppose I take, for example, sanction letter. Whenever the financial institutions they are giving any loan, they will sanction the loan and the sanction terms and the conditions are there. That is an important document. The rate of interest, whether it is a quarterly or half yearly or yearly, the rate of interest, whether it is a compound or simple interest that is mentioned in the sanction letter, and what are the securities offered by the corporate debtor to the bank or to the company, to the NBFC, they will mention the primary security, collateral security, third party guarantee, that is a corporate guarantor or the personal guarantor of the directors to the all are mentioned in the terms and conditions letter. Some of the banks it is called as a sanction letter. Some of the banks it is called a terms and conditions letter. Loan agreement. Once the loan is taken, whether it is a hypothecation or pledge or mortgage, and the pledge agreement is different, mortgage agreement is different, hypothecation, movable stocks, hypothecation, non-movable stocks of mortgage deed, and if at all the assets are possession with the NBFC or banks, they will take the pledge agreement or that assignment. Sometimes the company will take the loan against the shares, or some companies they will take a loan against the fixed deposit, that is lien or assignment, and the security documents are to be executed. And in the security document, a stamp duty is required. If at all security documents, a stamp duty is not there, that a loan is invalid. The security documents, the life is 3 years. As per the Indian Limitation Act, section 18 and 19, 18 acknowledgement of debt, 19 is part payment of debt. All these things are to be verified. But as in term loans, as long as the term EMIs are paid regularly, there is no need of taking the acknowledgement of debt. Once it is defaulted, from that defaulted to 3 years, acknowledgement is debt is required. And mortgage deeds, particularly immovable property, land and buildings, and plant and machinery, and hypothecation agreements for stock and other things. Debtors or receivables or stock hypothecation agreement. Pledge agreements are also they will take. And if the asset is under the position of the banker, pledge agreement, guarantee agreement, particularly corporate guarantee or the directors guarantee, that is a personal guarantee of the directors to the corporate debtor. And here the bank statements to be verified, when the loan was disbursed and how much amount. If at all the loan, if a financial creditor is there, he will provide the bank statement of account, interest calculation sheet, how much monthly or quarterly compound or monthly, the quarterly compound or monthly or a half yearly or yearly, whatever is there, that is also CERSI registration. Once the loans are given by the banks, the under SURFACE Act 2002, they will register centralized registry for secured assets. Government of India website also they will register that. Also you have to take. And once the banks are giving loans to, or NBFCs are giving loans to the particular this one, ROC charge registration, ROC register of companies under section 77, the charge creation, modification, or whatever it is there, satisfaction of charge, all these things are there. That ROC website also you have to verify. Revival letters. And once the agreement is taken, some agreements, the periodicity of the life of the particular agreement is 3 years. After 3 years, the revival letters are to be taken. That is under Limitation Act, section 18 and 19. And that is also some people acknowledgement of data, even balance confirmation also to be treated as acknowledgement of data, or revival letter is also called acknowledgement of data. If at all the company mentioned in the balance sheet also about the liability of the particular financial creditor, then that is also to be treated as a acknowledgement of data. If this acknowledgement revival letter, acknowledgement data, balance confirmation is not available, and information utility. Today, almost all banks they are uploading the information with the information utility as per the RBI directives. And all banks, whenever they are giving loans, new loans or old loans, all are uploaded to NSCEL, the that is located at Bombay. The central server of the NESL is located at Bangalore. Their regional office is almost all states. And NPA classification details, when the status, this is available with the financial creditor. When the account turn into non-performing, that is called substandard. Substandard to doubtful 1 category, doubtful 2 category, doubtful 3 category, or loss asset, that is the NPA classification. If you ask the printout of that one, they will provide DRT orders. Some other cases, via first they will start surfacing, they approach the DRT. The last resort they will go for this particularly the IBC. That DRT orders are also the particularly the whatever the claim amount they will mention in the DRT orders also surface in notice 13.2 or 13.4 also, or recovery certificates that is issued by the debt recovery tribunals. So these documents are to be verified by the resolution professionals whenever he is admitting the financial credit. If at all this is not there, simply some people, casual manner, they are admitting the claims. Later on, they are facing the problem. So, this type of information is very much required for correctness of the claims admission. Any doubts up to this point of time, sir? Sir, any doubts up to this point of time?
No, sir, not at all. Thank you, sir.
Please, sir, carry on. No doubt, sir.
Yeah, please continue, sir.
Next, verification by RP. The resolution professional verifies outstanding principal how much, interest accrued how much. That split is available with the banks in the core banking system. Penal rate, if at all banks are, if interest menu is there in the core banking system, and up to which period the rate of interest carried, after that if at all any penal is, all these things, if you take the screenshot of that one, definitely it is known to you, because the COC, the financial creditor are with you only, and other charges. The other charges are also the borrower has to pay, particularly surfacing to the section 13.2 or 13.4, whatever the notice is given by the bank. They will pay the newspaper or advocate on all the legal expenses, other charges, or sometimes the banks will go for a debt recovery tribunal, the court fees, advocate fees, all these things are included, and whatever the authorized as per the agreement reached between the banker and the borrower, that is available in the agreement terms and conditions letter, that is called sanction letter. Other charges are also banks are authorized, and a security created. What type of security offered for this loan? That is primary security or collateral security, or security is sometimes beyond security. Banks are taking third party guarantee also. The third party guarantee may be the corporate guarantor or the directors of the company, that is called personal guarantor to corporate debtor. Validity of the charge, that is also you have to look into. You have to verify the documents, the section 13 and the section 18 and 19 of the Limitation Act in the similar manner charge also. Take for example, equitable mortgage. Equitable mortgage is valid for 12 years. Valid for 12 years. If the company has given a validity 12 years back equitable mortgage, after that they have filed means that security is invalid. That's why banks are taking a encumbrance certificate for 13 years from the registered office. So the validity period of the mortgage is also validity. That's why limitation period is also the law of limitation also. You have to masterize that one. Important sections only, not all. Registration of charge. The registration of charge, particularly whether it is done with ROC or not, or limitation period, or assignment of debt. Suppose take for example, once the debt State Bank of India loan is there, the loan is assigned to ARC, asset reconstruction. Normally, the ARC will purchase the loan with 25% discount or 50% discount or 60% discount, sometimes 80% discounts. Banks want to download that non-performing asset. So in that case, ARCs will purchase. That's why today ARCs, they are getting huge amount because the asset, if 100 crores loan amount is there, they will purchase for 50 crores or 20 crores also. And if they recovered 80 crores on that 100 crores, 60 crores is a profit to the asset reconstruction company. Today, the ARCs are more active. Banks are also, instead of going for this SARFAESI or debt recovery tribunal or day-to-day operations are interrupted with the available staff, they are selling their non-performing asset to asset reconstruction companies. Today, the asset reconstruction company are active and they are getting a huge amount of the profits when compared to the banks. Because of the discount, the haircut, 80% or 60%, some cases. Before purchasing the asset by the ARCs, they will verify the location, they will verify the company, they will verify the balance sheet, they will verify the directors, they will verify all these things and they will decide and how much. Then they don't pay full amount, either 10%, remaining amount security receipts. The security receipts also, they will pay once the loan amount is realized. So that's why this is ARC's business is a good business. The old non-performing assets they are purchasing. Books of accounts verified and information utility records. All these things you have to be verified thoroughly, accurately. Then only 3 days if you spend on the verification, then the job is leave it off the job. And whatever they enter into the register, if at all any discrepancies are there, write it on a book. And why the claim is rejected, why the claim is less amount accepted, why the claim is accepted, more reasons, and return that particular claim if the claim is not in the books of records. Even some of the RPs, even though the claim is not available in the books of records, simply they are admitting, which is not correct. You are giving without any evidence, the amount it is a wrong claim. And thereby the sufferers are either maybe the financial creditor or operational creditor, because up to last rupee you have to distribute it to, up to last rupee you have to, the last person is in claimant's list is equity shareholders. We should not forget the equity shareholders also. Before that, the preference shareholders, we should not forget that one. Once the balance sheet is balanced, suppose 100 crores, balance sheet is balanced, why the equity shareholders are not getting the amount? Why it is up to the financial creditor and operational creditor? Balance sheet is a balance. Last year only. Now it is under CIRP. Last year 2000 crores asset side, 2000 crores liability side. Balance sheet is a balance. Means once the 2000 crores assets are sold, up to the equity shareholder, you have to distribute. Why it is not happening? And the same time, the balance sheet, assets, market value or book value, whichever is less. Suppose the building of the company is 10 crores. After depreciation, now it is only 1 crore. 1 crore means if you sell in the market, you will get 10 crores. Means always in the balance sheet, the assets are much more than the liabilities. That principle also keep it in mind. That principle also keep it in mind while admitting the claims. Claims by operational creditor. The evidences and all these things later on I will discuss one by one. What are the invoice, what are the RR, LR, lorry receipt or railway receipt or airway bill of lading or invoices, how to verify the invoice, all these things I will discuss later on. Now I am giving a snapshot of different types of creditors. Claims of operational creditor. Operational creditors submitted using the Form B. Operational debt includes claims arising from supply of goods. That is the major portion. Services, electricity, or whatever the outsourcing or Wi-Fi. In IT companies, particularly the bandwidth, particularly the internet service, lakhs of rupees is IT companies. Because of the bandwidth, either Airtel or other companies, BSNL, or they are providing. So the services, electricity or water, particularly if the essentials are there, that is a different. Other than that, essentials anyhow, during that CIRP, that is to be continued. In that example also they will give, if water is for hydro electricity, that is not for the generating electricity, means that is not part of the essentials. Employment. Whatever the employees, up to what time? And whether any retrenchment or if they left or then up to the date only. That too, individual employees, they can file, or a group of employees, one authorized person, either the association or union secretary, they can file on behalf of employees. Statutory dues, the GST, the ESI, employee state insurance, or public provident fund. Some companies, the PPF, they will recover and they have not remitted to the employees provident fund organization, or income tax or GST. Professional fees. So the professional fees, chartered accountant, the cost accountant for cost audit, or the company secretary, that professional fees also, that is also comes under operation. Rent, if the company is under the rented premises, rent. Transportation. So some of the companies, they will hire the transportation from outsourcing. Some companies, they are having their own transportation and utilities and the maintenance contracts. So the maintenance contracts, outsourcing, all these things are comes under the operational creditor. Examples are suppliers, the raw material, contractors, if at all infrastructure company or real estate companies are there, subcontracts, consultants for designing and all these things. Some companies, they will take consultants, not only the manufacturing, also they will take modification of the plant and machinery, all consultants. Chartered accountant, cost accountant, company secretaries, they are also offering their services to the companies. Advocates, particularly legal matters, particularly Factories Act or Labor Code recently. If at all any issues are there in the courts, they have to, and the fees to be paid. Vendors, that is also particularly the whatever the machinery, whatever the electricity items or air conditioned, whatever vendors are there, electricity boards. Once the company is using the electricity in a big manner, that also not whether it is big or small, electrical boards, electricity boards, that Transco or Genco, Transco only, and the telecommunications, particularly IT companies, they have to pay more the particularly for providing the internet facilities like that. Software service providers, some other companies they will provide the annual maintenance contract for the computers, whether it is a ERP and other things. Logistic companies for inward raw material or outward the finished goods, the transport company to reach the markets, to receive the goods from suppliers to the company. All logistic companies, they are also providing the services. Sometimes that also amount is due. That is also comes under operational creditor. Documents. The documents are to be verified in case of operational purchase order. The purchase order. Once I have purchased some raw material to the others, first I have to issue the purchase order. The terms and conditions, the quality, the price, the due date, and stipulated terms and conditions, whatever it is there, and whether it is a arm's length transaction is there or not, or a related party, and work orders, subcontracts. Particularly, the work orders will be there in pharma companies more or infrastructure companies. For that, they will raise the tax invoice and delivery channels. Once the goods or services are provided to the corporate debtor, the delivery channels. The goods receipt note. Once the goods are received by the company, they will prepare the goods received note. The quality, the quantity, all are mentioned, and e-way bills and GST returns and company ledgers, whether it is properly recorded in the company ledgers or not, and balance confirmation. If at all continuously provided the particular raw material at the end of the year 31st, the company will ask the balance confirmation from the operational creditors, or the company will give to the operational creditors emails, the exchange of information. Whenever the order is placed or received, then the correspondence resting in the emails also, and service level agreements, particularly for outsourcing agency for maintenance of the particular plant and machinery or building, etc., running bills, and whatever the bills they are issuing, completion certificates. If at all any job is assigned to the outsourcing agency, the completion certificates, all these things are very much required for accuracy and confirmation of the claims that are received to the particular financial creditors. They were particularly for the resolution of professions, while issuing the public announcement, they received the claims. All these things are keep it in mind, and all these things are not applicable for all. Certain type of transactions, only certain documents are there. And RP verifies actual supply, whether the stock is supplied or not. How to verify whether it is entered in the stock ledger, stores ledger, or bin cards of the stores department. If doubts are there, if any doubts are there, this is not a regular phenomena. Once small companies, within 2 to 3 days, this process, if you are concentrating on this area, then the process will complete within a short span of the medium sized company, not more than 4 to 5 days. And if at all big companies are there, You have to take the services of any person who is competent in this area. Competent in this area, not a general person. Contract terms, terms of the contract. If at all you verify the agreement, what are the terms of the contract? Payment history. Suppose once the goods are supplied, whether it is paid or not, if you see the particular account wise or supplier wise statements, the payment history is available. TDS deductions, whenever you are purchasing any equipment like air conditions or table or computers, you have to deduct the TDS or GST filings or debit notes. Particularly when the company received the goods, they will prepare the debit notes or credit notes to the finance department. Existing disputes, some of them claims are not paid on account of the particular quality, poor quality, or the price is different after the due date. If at all supplied, pending shoots. Some of the claims already shoots are pending with the courts on account of these are to be properly addressed, and then only the claims issue will not happen. The challenges, more challenges are there in claims admission. If at all pending issue in shoots are there, then they whatever the agreed the company is going to pay, that is to be admitted subject to court verdict. Court verdict. All these things are to be verified. Sir, any doubts? Sir.
No, sir, not at all.
Okay, sir. Now coming to claims by employees. Whatever the employees are there, particularly employees submitted using Form D. Claims generally include salary, leave encashment, bonus as per the Bonus Act. Only certain people, the two workers, or if at all the company bonus is there, that is on performance incentive bonus. Even railways also they are getting performance incentive. So based on the profit, if that is there, you have to verify incentives, particularly those performance are there to increase the productivity. The company will introduce some incentive, gratuity based on the Gratuity Act. If 10 years are completed, then they are eligible for a gratuity also, and reimbursements, particularly the medical reimbursement or a traveling reimbursement or whatever the medical claims. If the company is paying the medical bills to the employees, then that is also pending. So that is also to be admitted. Pension dues. Once the company is in trouble, whatever the pension scheme is there, pension now today, no company is handling. No company is they paying the pensions. Either they are taking the life insurance company one pension workers pension policy, or NPS, National Payment new pension scheme. So this is also to be verified properly, and documents to be verified. You have to verify appointment order. If at all one employee is submitted wrong claim, what is the appointment order? Can you show me what is the salary slip, lost drawn as salary slip, and Form 16 income tax, that is also to be verified, and the attendance register, whether he is coming to the company or absent, and still in the case, particularly no work, no pay. That is a decision given by the NCLAT Eastern Zone. NCLAT Eastern Zone. And bank credits, once the salaries are paid, it is directly credited to their respective savings bank account. And HR records. The HR records are available, particularly the human resource department. They will maintain the all the employees and officials, particularly their employee number and their basic salary and increments or incentives or promotions, all are available. If at all the claims are more, or these are to be verified to fill that. If at all the employee is resigned long back and he is claiming, then we have to plug out those irregular claims also. Some of the employees or workers, they resigned long back and they will also claim and verify that one with the help of appointment letter, the salary slips, Form 16, attendance records, bank credits, directly credited, HR records, etc. Claims by workman. Workman submitted Form E. Claims include wages, overtime. What is the overtime? The policy guidelines of the company. Up to 2 hours, what is the incremental rate? Above 2 hours, what is the incremental rate, etc. Bonus, most of the workers, they will enjoy the bonus, particularly bonus act. Beyond that bonus, some companies, they offered additional bonus also. Retrenchment compensation. Once the company has they retrenched the people. As per the service level agreements, they have to pay 3 months salary or 2 months salary like that. That also you have to verify the gratuity, the leave salary. Some of the companies, whenever they are retiring or retrenchment, whatever the privileged leave is there at their credit, for that also you have to pay the leave salary also. The company has to pay during CIRP. If at all these claims are received, the company has to pay compensation and labor loss. And whatever the workman compensation and labor code is there, that is to be implemented and that is to be properly paid. Verification includes, you have to verify, for this you have to verify the muster rolls, the attendance register, the wages register, the PF records, the ESI records, the factory records, all these things you have to verify. So here, if at all you are busy with the various activities, other activities, and it is taking a lot of time, you can take the services of the staff that is available in the company. And you have to randomly check the authentic, the information that is claims information is correct or not. And you have to direct them properly. Simply not assigning the job. Assigning the job means simply they will and they mention all the claims total and give it to you. No, whether they cross-checked with all these records and registers and bank statements, etc., etc. So verification includes the muster rolls, attendance register, wages register, PF register, and ESI records and factory records. You may have some doubt. Sir, why should I verify all these things? Correct? But your role is claims verification. But if the volume of work is more, if you warrants any supporting stuff, you can take. And but overall, you're the responsible person. The claims this much, this claims are financial creditor, this claims are operational creditor on insolvency commencement date. And you are signing not by others, but take the assistance of a finance department, take the assistance of the production department, take the assistance of a HR department, and formed one small committee. And all people, they will verify and give the, but finally you are held responsible and you are accountable. And once they are prepared, check each and every person how they prepared and what sources of document, and whatever the sources of document is there, ask them to take xerox and file it. And once you are verifying and whether it is there or not, you cross-checked with the document. Thereby, your job will be simplified. Otherwise, you are responsible and accountable also. Claims by government authorities. The government authorities submit a claim using Form B. Examples include the income tax, the GST, the customs the excise, the PF, Employees Provident Fund Authorities, the Employees State Insurance, or municipal taxes, if any, or electricity duty, or water charges, all are the governments, they will file under Form B. And you have to verify the previous records also. How much last month paid, how much they claim this month, or before CIRP, these claims, how they are addressed, or if at all any pending is there, and before once they paid earlier, what is how much amount paid, you have to cross check that one. So even a government, particularly the claims of the government, whether it is a state government or central government, whether it is income tax or GST or customs excise or PF authorities or employees state insurance or municipal taxes or electricity duty or water duties, whatever it is there. Once the claim is there, you please verify the previous record. Today, the tally or the income tax, particularly IT. IT means information technology. The softwares are available. Even 2 years back, 3 years back also, search is possible. And the accounting records, previous history. That's why I told once you are reported as an IRP or RP, first of all, you ask the systems administrator, block all the user ID and password. Then, based on the need, you allow one by one. And once you reported on the reported date, whatever the system backup is there, backup of the transactions, the secondary data that is available in the RAM, random access memory, take the copy and preserve it. If during the CIRP, if at all anybody altered that data, particularly in the IT system, then the exceptional report will be generated by the system. You verify the exceptional report. If at all any changes are there, material changes are there in the earlier data, that is reflected in the exceptional report. So here today, most of the physical registers are not available. The IT, information technology or computer system, the reports are available. So we have to take the printout of that one, and whenever any changes are happened, why the changes, and in that changes also, who has changed, what is the employee name, what is the date, what is the time, all are mentioned in that particular. That's why the prima facie, you have to take the backup of the particular computer system on CIRP commencement date. That is where you have reported to the company, and ask the systems administrator for the last 3 years or 4 years, the backup data tapes, please take under your custody. And the present data also, take the backup and keep it with you. And block all the particular user IDs. And one by one, what is the necessity, what you are doing, whether it is required for user ID and password to access the system or not, you have to decide and allow accordingly. Documents, particularly for government claims, assessment orders, the demand notices, the appeals, the recovery certificates, particularly DRT or interest computation, all these things are to be attached to the claim form by the government authorities also. Government authorities simply they write some letter, please pay means no. Assessment orders, they have to enclose with the claim form. Demand notice, if at all any issued by the government, that also to be enclosed. appeals if at all it is there, that also recovery certificates if at all there, that also interest computation, all these things are there. Home buyers. Now, this is another type of the particularly the financial creditor, but for him, the representatives are there. So, class of creditors representative is there on behalf of home loan buyers. So, home loan buyers are to be treated as a financial creditor. Under section 5(8) subsection clause F, claims are submitted on form CA. These forms are claimed under CA and documents. What documents you have to verify? Builder buyer agreement. In home loans, what is the builder buyer agreement? Whenever the claims are made, the claims are to be attached to the builder buying agreement or allotment letter. If at all he is allotted any plot or flat or duplex or independent, whatever the number and other things. Payment receipts, how much paid? For that, the builder will give the payment receipt and the bank statement. Bank statement, how much amount it is debited and credited to the builder's amount. Possession letter. And the possession letter, if at all they provided. Cancellation letter or a RERA registration. Whether the builder is registered with RERA, normally they will mention in all receipts and this one and court orders. So here for home buyers also, these documents are to be attached to the form CA. Then only you have to admit. Otherwise, don't admit. For this also, the full record is available with the real estate builder or builders and cross-check that one. Cross-check that one. And where the claims exceed prescribed threshold, authorized representative is appointed or not. The authorized representative to all home buyers in the COs, they can attend. They are only the intermediaries between the home buyers as well as the RP. He is like a postman duty. Voting is exercised according to instructions received electronically from home buyers. Electronically from home buyers. Financial creditors in class. Financial creditors. So, other than bank loans, other financial creditors, other than bank loans and other than an NBFC loans, if the company is issued fixed deposits, that is also comes under financial creditor. If the company is issued bonds, that is also comes under fixed deposit and bond holders. Normally, it is unsecured creditors. But debentures, two types are there, secured, unsecured. Secured means charge on the floating assets of the company. Once the company is under CIRP, the assets will become fixed charge. And debentures are also without any charge also there. But for debentures, SEBI will appoint SEBI. If at all it is a listed company, the Securities Exchange Board of India, they will appoint trustees. The trustee agreement, all these things, deposit scheme investors. Sometimes the company will also accept a deposit. Claims submitted in the form of a CA. This is also under CA. Claims by guarantors. They have given guarantee. They have given some guarantee. So the creditors may be corporate guarantee or personal guarantee or counter guarantee for the loans availed by the company. For the loans availed by the company. And if at all it is invoked, then they paid, they are also eligible to claim that amount from the corporate debtor. Documents. Once the guarantors are given, what is along with the particular claim form, the guarantee agreement. the invocation notice and payment proof. Once the guarantor, the guarantee paid, then once the guarantor who given the guarantee paid the amount, payment proof and the loan documents, all these things to be attached with the claim form. Claim form. And the claims by decree holders. Some of the decree holders, particularly the workers, they got the decree for a workman compensation or any decree holder. Claims arising from decree holders, civil court decrees, decree copy also to be enclosed with the claim form, and arbitration awards. If at all it is under arbitration, arbitration award to be enclosed, or DRT orders. And if the some companies they some financial creditors they file with DRT and that orders are there, that orders that is recovery certificates, etc., etc. So this is with regard to decree holders, document, certified copy of the judgment that is to be properly verified, not simply the judgment copy, award or execution proceedings. All these things are to be attached with the claim forms. Sir, any doubts again, sir? Sir, any doubts or clarifications?
No, sir.
No, sir.
Next, claims by arbitration award holders. Documents include award copy. Section 34 status, declaratory suits. That is also to be enclosed. Court orders, interest calculation. For arbitration award holders also, this is to be enclosed. And claims by asset reconstruction companies. Once ARCs are submitted, assignment agreement. In most of the cases, the assignment agreements are not filed by the ARCs. Why? Because once the bank is sold that property, that loan, 100 crores of property, 20 crores to ARC, then that is known to the, but the information they revealed to the particular corporate debtor also. Then further litigation will happen. But as per this one, assignment agreement copy to be enclosed. Assignment agreement copy to be enclosed. Deed of assignment. Deed of assignment. Assignment agreement and a deed of assignment both are to be enclosed. And once this is ARC is registered one under NBFC with RBI, then RBI approval letter is also to be enclosed. This is a company registered or licensed by the Reserve Bank of India. Loan documents. Once the bank is assigned that loan to that particular this one loan agreement, that is also security assignment. Whether the security given by the corporate debtor to the bank, that is also to be assigned to the ARC. So, in ARC cases, you have to thoroughly examine this one. The assignment agreement, the deed of assignment, whether the ARC is registered with RBI, what is the registration certificate, and once the bank, the loans of the corporate debtor transferred to the ARC, the loan agreements or loan documents, and once the corporate debtor given any assets of the corporate given as a primary or collateral or the deed of guarantee, these are to be assigned to the ARC. Contingent liabilities. The contingent liabilities also they will claims they will also submit bank guarantees. It is a contingent liability. Once the claim is invoked, bank guarantees, performance guarantees, pending litigation, tax appeals. These are also from safe side. Some of the companies, some of the particular guarantees, they will file. For safe side, they will brought to the notice of the RP. Boss, this is a bank guarantee given. At any time, it may be invoked. The guarantee given by the company is this much amount. During CIRP, if at all it is invoked, this is a liability. Like that, the performance guarantee, particularly for construction of buildings, etc. The performance guarantee holder, they will also file the intimation. It is not a intimation because the claim is not crystallized. Pending litigation. Suppose one company, the claimant is there. He is filed with High Court and he is demanding a higher amount, but the company is not accepted. That also he has to intimate subject to court decision, this pending litigation and the tax appeals, particularly the GST or income tax, etc. RP admitted the claim subject to available evidence. Based on the available the evidence only, these are to be admitted. Now coming to the related party claims. Related party financial creditor may submit claims. However, under section 21(2), related party financial creditor generally do not have representation in the COC or participation in COC or voting rights in COC except certain limited circumstances are provided by law. If at all that is to be finalized by the NCLT, then only we have to allow. Otherwise, we should not allow them in the COC. And other creditors, I told about last one, other creditors. The claims security deposit refunds. Some of the buyers, those who are going to purchase the products of the company, they may have deposited some security deposits. Even some companies from employees also, they will take security deposits because if at all they have did any wrong thing, that security deposit will be appropriated, particularly the collection. If the collection agents are there and the insurance claims and royalty claims and environmental compensation, sometimes environmental, if the company is damaged, the surroundings, either air or water or waste management and licenses fees, the license renewal fees not paid, particularly this the SEBI listing agreement or some licenses. If all these things are there, then these are categorized under other creditors. Other creditors. So this is the in brief about the general aspects, and shall we make teaser? Hello, hello. Shall we take a 10 minutes tea break, sir?
Yes, sir.
That should be good. Yeah, let's do it.
Okay. After this other creditors, then how to verify what is the process and all these things after 10 minutes break, we will discuss. Thank you. Sir. Is it okay, sir? Voice is audible?
Yes, sir, it's audible.
Sir. Now, verification methodology adopted by RP. All claims are to be properly verified. Even during CIRP also, if at all any court orders are received, that is brought to the notice of the adjudicating authority as well as a COC, and based on their decision, that is to be admitted. And whatever the claims that are received during the CIRP process also. Next one is the RP should adopt a systematic verification that includes cross verification with the corporate data or books of accounts. Particularly, every claim should be reflected in the corporate data books, whether it is a creditor or financial creditor or operational creditor or whatever it is there, it is available in the books of records. If it is not available in the books of records, you have to return that claim and ask the claimant to produce additional evidence. And these claims, keep it pending and subject to approval of the COC as well as adjudicating authority. Because these are not available in the books means we don't have the authority to admit. So the cross verification, the books, particularly the creditors, the schedules are available. Or the bonds, the schedules are available. Or the debentures, schedules are available. Whatever the liability side, most of them, the books are also available. Books means not physical books. Today, almost all companies are having the electronic records, that is software, the ERP software or Tally, etc. Verification using information utility records. This is not mandatory for operational creditors, but financial creditors, it is mandated. So that's why the information utility at the time of the act coming to the picture, the information utility role is very less. But today the information utility role is more, and almost banks, they are uploading the information with the information utility. But still, we should not decline the claims. And if that information utility register the information the claim through information utility documents are not available, we have to admit, but these are to be informed to the COC also. And if at all during the formation of the particularly approval of adjudicating authority, then we have to mention all these things. Examination of a bank statement and a loan account statements. That is possible. Today, almost all companies, they are having corporate internet banking. Corporate internet banking. You need not ask the banks also. Corporate internet banking, the companies are having, log in that one, and all accounts of the corporate are available in the corporate internet banking, and go to that account statement. Period from to is also available. Download the PDF files and accordingly file. And if at all payments are not there or not, whatever the information required, the bank statements, that is available. In case the corporate internet banking is not available, then you have to get the bank statement from the bank. They will provide with reasonable charges also, and duly certified the account statement also. Review of the statutory filings and before admitting the claim, particularly with regard to bank charges, whatever the assets that are mortgaged to the bank or hypothecated to the bank, that is available with ROC, charge registration, register of companies. Or whenever you are purchasing, review the statutory filing, the purchases and sales, the GST returns are available. And the GST returns, if at all any delay and other things are there, then the remarks are to be mentioned appropriately, and that is also brought to the notice of the people, because you are only the facilitator. The decision-making authority is none other than the board of directors, your board of directors. Your board of directors is a committee of creditors, and the NCLT. So the tax records, verification of security interest, particularly whenever mobile or immobile properties or loans are given by the banks, within 30 days, they will register that particular loans under CIRP, that is Central Registry of Securities, particularly the Government of India. And with 30 days, if at all it is not registered, the bank has to pay the penalties to the government also. So this is our MCA portal, the title, documents, etc., etc. Confirmation of a limitation through acknowledgement. Don't accept the claim without that particular acknowledgement. If at all the claims are before 3 years, whether proper acknowledgement is there or not. Suppose take for example, one supplier supplied the stocks. The stocks are, the bill of exchange is 3 years back. Still the company is not paid. No, they correct. But whether the company is given any acknowledgement for that bill of exchange or not. If not, that particular claim is invalid as per the Limitation Act. And whatever the acknowledgement date is there, extended, or balance confirmation, it is also extended the period of limitation. Revival letters, that is also extended, or judicial proceedings. If at all that cases are filed in courts, the revival letter is not required, as long as the case in the court, that documents are valid. Examination of a pending litigation before the NCLT or DRT or High Court, arbitration and other forms, that also please verify. Reconciliation of the amounts claimed with the contractual terms and supporting document. Some of the people simply they are charging a rate of interest. Whether the rate of interest is a compound or simple, whether compound is a monthly or quarterly or half yearly or yearly, that also you have to verify the agreement. Simply, if at all the operational creditor for a delayed payment, he is charged a rate of interest with exorbitant rate of interest, that is not valid. If subject to the agreement reached. So at the time of supply of the goods, particularly by the operational creditor, the company, the corporate creditor and operational creditor, they will made an agreement. In that agreement, the rate of interest is there. Then continue, they accept, and the delayed payments rate of interest is there. In the agreement, accept the interest. Otherwise, don't accept the interest. Next, communication with the claimant to rectify the deficiencies. And whenever it is not agreed with your books of, and if at all any doubts are there, sit on that particular claim and complete that process in one go only, not in partial. If the claims in last minute accumulated and a number of claims are to be verified, then automatically sometimes it is forcibly we have to agree. There is no time agreed. Thereby it will be a problem. Today, if at all you received the 10 claims, 10 verify that one books. If at all it is not matching, if at all still some evidences are required, if at all any some proofs are required, mention that one, return that claim and a copy to be filed with you, a copy of the same to be filed with you. Otherwise, tomorrow to counter argument, all these proofs are available. Communication with the claimants to rectify the deficiencies. For seek additional evidence where required. Admission or a revision or a rejection of claims issuing by the reasoned decision. So whenever you are admitting, that also you have to write the reason for admitting. Okay, this is a claim that is supplied on so and so as per the this purchases register, invoice number tallied, date tallied, amount tallied, price also tallied, and the documents are also in force, and hence eligible for admission. Like that you write and sign it. So otherwise, simply admission means without comments also, that is not correct. Once you are admitted, the comments. Once you are revision, comments. Once you are rejection, comments of the RP is also required on the claimants, the annexers, etc., etc. Constitution of Committee of Creditors. Once the claims are verified, RP constitutes COC accordance with Section 21 of the IBC. The COC ordinarily consists of only financial creditors whose claims are admitted. But today, if any operational creditor more than 10% of the total claims, he is also to be admitted as to participate in COC, but without any voting rights. The voting share of each member is proportionate to the amount of admitted. Calculate that one. Neatly calculate up to last digit or point dot 2 digits also you arrive. And operational creditors, employees, workmen, government do not have ordinarily the part of COC, although they may attend the meeting under specified circumstances without voting rights. Where there are financial creditors in class, such as home buyers or deposit holders. Deposit holders are also financial creditor, like home buyers. They are represented, authorized representative, who cash based on the instructions received from the creditor. But the authorized the creditor, the authorized representative, he don't have any right or any alteration. Whatever the voting is there, simply he pass on to the resolution professional, and whatever the claims that are made, he is not verifying authority also. Why he is not verifying authority? Because the books of accounts is not available with him. So he is only the postman duty. Who casts the votes based on the instructions received from the creditors in class? Related party financial creditors are generally excluded from the representation of the COC, subject to exceptions. The related parties, it is a big subject. Actually, I have seen in the chat box also, one professional asked about the related party. So the related party, whatever the related party verification, all these things, it is a subject, so many things. And I will take one exclusive clause on related party transaction, how to verify, what is it to be cross-checked, and all these things I will discuss in detail. Next, the common issues encountered during claim verification. What are the common issues? The RP frequently encounters practical challenges such as duplicate claims by the assignees and assignors. Claims assignees and assignors Claiming lack of supporting document discrepancies between the books of the corporate data and Creditors records, the claims ward limitation, dispute regarding interest penalty charges, completing security interest, invocation of guarantees, treatment of contingent liability, pending arbitration or court proceedings and recovery. Today, once the company is under CIRP, everybody will try to encash whatever the best is there. So that's why there is a lot of a scope for wrong claims. There is a lot of a scope for duplicate claims. There is a lot of a scope that claims are made. It is not tallied. It is not available with the book. So that's why lot of precautionary measures are to be taken by the RP. So don't completely depending on the persons who are assigned this job, and you have to supervise, monitor and supervise. Finally, you have to check within a day once the groundwork is prepared by your supporting staff in claims verification. And cross-check all these things. Once this is there, one claim is there, where is the particular the books of amount, and what is the agreement, whether it is a time bound or not, what is the proofs he has mentioned, whether invoice is there, bill of exchange is there, paid the limitation act satisfied or not, or goods received note, etc., etc., etc. Only 1 minute, sir. Hello. 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 Okay. So the corporate data claims, all these things are to be verified properly. And each of these issues require careful examination. And the reason for determination to ensure that only legal sustainable claims are to be admitted. Legally sustainable, not all claims. I have seen, I am also the witness. Some of the RPs, the background, the financial management background is also required. How to verify the claims properly? Simply not admitting whatever the papers are submitted by the claimants. And some of the claims are time barred. Some of the claims are the irregular claims. Some of the claims, rate of interest, even though that provision is not there in the agreement, they are adding whatever. Why? Because the payment is not made on due date. But if at all payment is not made on due date, if there is no supporting document for a rate of interest or terms and conditions are not there, why he should not charge a rate of interest? And all these things are to be verified properly. Next, best practices for resolution of professions. A professionally managed claim verification should include maintaining a detailed claim register. You have to prepare one claims register using standard verification checklist. And whatever the checklist is there, you paste it on that particular register, relying on information utility records wherever available. Once the information utility certificates are there, you completely bank on or depending on information utility. But if at all any claimant added any amount to the information utility, for that supporting documents are required. Reconciling admitted claims with the corporate data books, that is compulsory. The books are not, physical books are not available. Particularly the ERP software or tally software document reasons for admitting or rejecting. Once admitting also, you have to write the reasons. Rejecting also, you have to write the reasons. Ensuring timely completion with the creditors. That don't delay. Today, if at all I received 10 claims, complete that process. Tomorrow, if I received 10 claims. During that claims received period, whatever the claims received, ongoing, don't accumulate. Once accumulate, the load will be increased. And daily, because the claims are received in your name only, and they are sending by register post, or some claims they may send in particularly email, etc. But once the physical copies are received, immediately verify that one, and whatever your knowledge in that particular claim, whatever the deficiencies, write it on that particular with a pencil. After that, ink it, and finally admitting or not admitting reasons are also to be elucidated properly. Proper documentation and transparency are essential. Withstand scrutiny before adjudicating and appellate forms. Suppose if at all I have admitted wrongly and communicated to the adjudicating authority, then automatically, if it is a wrong, then adjudicating authority will also blasting like this. Why have admitted? Why have not properly checked? Some other company, some of the RPs, I personally verified the wrong claims they are admitting. They are not going in detail. Prima facie, whatever the register post they are receiving, or speed post or courier they are receiving, simply they are filing in a box file, and simply the totals are carried forward through Excel, and accordingly, if a financial creditor is there, and the related, non-related parties, that is very important. That is, I will discuss in detail about the related and the non-related, and how to identify the related party. All these things I will discuss in the next session in detail with examples. And scrutiny before the adjudicating authority and appellate forms. Hence, the admission and verification of claims are cornerstone of the fair and effective corporate insolvency. The resolution profession must independently exercise the due diligence in examining the each of the claim on the basis of a documentary evidence. Without a documentary evidence, some other people, they created fabrication. Suppose you take, for example, some claims, originals are to be verified. Suppose they have enclosed some invoice, whether the same invoice available with the company or not. Once the bill of exchange is there, the duplicate is available with the company or not. The signatures of the particular the bill of exchange and other things, because of fabricators. So today the technology also, the fraudulent claims are increasing more, and the statutory records and applicable legal principles. All these things are to be verified. Accurate categorization of financial creditors and operational creditors, or home buyers, or employees, or workmen, or statutory authorities like state or central government, and other authorities or departments, or guarantors and stakeholders ensure a lawful constitution of the committee of creditors. Whatever the committee of creditors you are going to establish in the initial stage, that should continue forever. Why? Because that much accuracy at the initial stage is required. That is the foundation of the CIRP, and the correct allocation of voting right. 0.00 up to last 2 digits, you have to verify thoroughly and give the voting right. Otherwise, sometimes if a wrong formation of COC is there, then automatically the adjudicating authority may take a reverse of all these things. A meticulous verification process not only safeguards the rights of the stakeholders, but also strengthen their credibility, the transparency, the efficiency of CIRP. Some of the people I have seen perfect in claims advice. Because here what I am telling is, to some extent, the financial knowledge is also required. The process is not a difficult task. It is an easy one. and only one or two CIRPs, if at all you verified. Third one is automatic. So for that, some homework is also required. Whatever the claims, how to verify these claims, and thorough interaction with others, and simply list is prepared. If banks are there, what what are the particular the claim form enclosures, operational creditor claim form enclosures, or the workers claim form enclosures, or the particular the enclosures list you prepare checklist, and give it that assignment to your the survey the company who are providing that services to you, and they will check it and counter check it, then automatically every stakeholder will be happy. And insolvency and bankruptcy code to achieve timely and value maximize resolution of financially distressed companies. In the financial distressed companies, definitely the books are not properly available. But one entry will be reflected in different registers or different places. Suppose I take for example, the company has sold some stocks to me. If that stock register is not the sales register, the company sold some stocks to the other company. So if that sales register as well as purchase register, you can correlate with them, or GST returns. But what are the books or registers, the computer system, and the records of the corporate to check for verification? Here, this is a list I have developed, and IT system also I have developed. And IT systems, what type of softwares the company is using for this particularly accounting system, etc. I will discuss about the books, the registers, and the records of various claims and softwares and all these things. One of the primary and statutory responsibility of the IRP, actually this role is to be satisfied by IRP only. Initial days, it is a difficult one. IRP role is also a difficult one. Why? Because initial days he will be the person who has received the claims, who has collated the claims, who has verified and they submit the particular statement to the adjudicating authority for formation of a corporate and the COC. Under section 1825 of the regulation 13 of IBBI regulation is to verify the claims submitted by the creditors. The verification should not be confined to only the documents furnished by the claimant. He may be submitted. He may be submitted the invoice. He may be submitted goods received note. He may be submitted a transport document. He may be submitted so many things. But all these things are to be tallied. Otherwise, that is not a genuine claim. Even though the employees may be submitted a claim, but the appointment order, whether the appointment order given by the company or not, the salary slips, whether the salary slips are issued and in the wages establishment receipt is there, or in the HR department service file it is there or not. Form 16, whether it is tallied, the Form 16 statements with the company, whether he is fabricated or manufactured or designed. Today, everything is possible on account of Microsoft. They will use the paintbrush and they will change the names and all these things are happening. It appears like original. It must be corroborated with the books of accounts and statute registers, electronic records, ERP systems, and other documents maintained by the corporate data. It is to be tallied. It is to be correlated. This cross-verification ensures only genuineness claims are admitted and the committee of creditors constitutionally correct. If that is not happening, whatever the agreement is, this is an agreement reached between, okay, agreement reached, whether it is available with the companies or not. So many people simply whatever the claims are there, simply they are admitting, not cross-checked. That is the biggest problem. A comprehensive checklist of the claims to be verified and the corresponding books, registers, and a computer system should be examined. Now, how to verify the process and all these things? Term loans of the bank. Once the company is taken term loans, the general ledger of the company, the loan register of the company, the bank loan register, the term loans means what the term they purchase the fixed asset register, security, once it is a security created, or charges register ROC, or tally with the ERP or SAP or Oracle, or CBS loan reports of the bank, or bank reconciliation statement, particularly once the loan is disbursed, it is available in the loan account amount, and the board resolution file. Once the loan is taken from the bank, board will give the resolution to take the loan from the bank and the loan documentation file. For a term loan from a bank, if the company has taken, these supporting information is very useful. Even simply they don't take loan, first board is approved. Once a board is approved, then the board will allocate the documentation and all these things are to be completed by X or Y or Z person. And the banks, they will take the board approval and all the, and accordingly, and the charge creation, cash credit, that is working capital. Another name is some banks overdraft, cash credit ledger, the replica or the mirror image of the bank's cash credit with your this one, drawing power register. Every month, the drawing power will vary based on the stock statements, and stock statements are to be submitted. These stock statements are to be tallied with the stock register and debtors register and general ledger, the company general ledger, and bank reconciliation statement every month they will do, and tally or ERP or SAP or Oracle ERP, that is softwares. In this software also, the cash credit, the menu is there. In that menu, the accounting entries and all these things, debit, credit, balance, interest application of the bank, all these things are there. Working capital demand loan. Sometimes the bank will take, the company will take working capital demand loan from the company, from the bank. Company will take working capital term loan from the demand loan from the particular bank. Loan ledger, general ledger, the trial balance of the company, and balance confirmation file, and every the year 31st March, the banks will ask balance confirmation. A copy of the same is available with the company also. Interest ledger, every month they will apply the interest, and to match that one, the company will also pass the endorsement, the entries in the ledger, and the loan documents register. How many loans they have taken a company, on which date, and what is the primary security, what is the collateral security, when the ROC the charge is created, and when the board approval is given for that particular loan, what type of assets are purchased for that particular loan, and if assets are purchased like machinery, what is the invoice date, and all these things are available. Letter of credit liability. Once the company is availed any LC to import the goods, LC register is there in the company, bank guarantee register, and import register, and purchase register, because the purchases are to be made and with the help of letter of credit, and ERP purchase module, SAP, treasury module, all these things cross verification is required. Bank guarantee within the country bank guarantee. Whatever the bank guarantee is there, that bank guarantees are on, bank guarantee registry is available in the company, and a contingent liability registry is available, and a general ledger in the particular company's general ledger also available. ERP treasury module is also available to determine how much bank guarantee taken by the company, what are the bank guarantees and all these things. Suppose that the company has taken ECB loans, external commercial borrowings loans, external commercial borrowings loans. Once the company is borrowed funds from other countries, that is called ECBs. Foreign currency loan registry is available in the company. But for ECBs, RBI compliance is required. That correspondence, FEMA register, the FEMA guidelines are to be fulfilled, and general ledger and Oracle treasury module also to be verified for ECB loans. Debentures and bonds. If the company is going for a debentures and bonds, debenture register is available in the company, bond register available in the company. Once the debentures are secured, particularly the floating charge to be created in ROC, that is also available amount, the charge ROC charge register and general ledger, general ledger, the register ledger, that is assets and liabilities, and investors register, all these things, how many debenture holders, how many bond holders, all these things. Lease liability, particularly lease liability, that is Indian Accounting Standards 116, lease register and a lease agreement file. Sometimes the company will take a lease premises or lease mines for coal and other things, fixed asset register, ERP fixed module, all these things are there. Next one is NBFC loans. Once the company is taken any NBFC loan, the loan register of the company is available. In the general ledger, particularly assets and liabilities, it is mentioned loan documentation ratio, what type of documents we have given to the particular NBFC, and the interest ledger from time to time, whatever the interest they are charging, and the intercorporate deposits. If at all intercorporate deposit ICDs are there, ICDs are to be verified. Particularly ICD registry is available and the general ledger is available. That is assets and liabilities and bank statements. Once the funds are transferred from bank to the intercorporate their bank account, or board minutes are available and the loan agreements are available. Operational creditors, particularly the suppliers of raw material, purchase register. First, it is a purchase register. Purchase ledger is available. Creditors ledger is available. Those who are supplying the raw material on credit, and goods receipt note is available, and stores ledger. Once the goods are received by the stores department, that ledger is available. Inventory ledger, that is the inventory opening balance, purchases, and consumption closing balance, and material receipts registries are available, and purchase module is available, and a tally purchase module is also available in IT systems. And service providers, other than that particular suppliers, some service vendors, service register, contract register, purchase register, expense register, ERP accounts, payable module, all these things are available. Transporters, particularly once the company is engaging the services of transporters for moving the stocks from the seller to the company, or company to buyer, the final goods, the freight registry is there, logistics registry is there, delivery channel is there, freight ledger is there, vendor register is also available. So you cross-check that one. Not only that one, contractors. If the company has given some contractors, some contracts, particularly some the pharma companies, they are giving some contract to the ancillary units located nearby. Work orders register, contract register, running accounts bill and measurement books and vendor register. These are available. And professional fees, particularly to the chartered accountant or advocates or any engineers or consultancy services or company secretaries are costed. Legal expenses register, consultancy, vendor ledger, and board approval files also. For everything, the approval of the board is required. Rent payable, if the company is hiring the premises on rent or at any places, and lease register is available, rent ledger is available, rent agreement is also available, and a fixed assets register also. In that particular fixed assets, whatever the fixed assets located in that premises, employee salaries, for that, what you have to verify? Payroll register is available, salary register is available, employee master is available, HRMS system is available, attendance register is available, and payroll software like SAP, HR, and Oracle, HRMS, Joho, payroll, or Gray HR. These are the various software companies that are provided the payroll package, and the salary bank transfer registry is also available. For all these things, cross-checking is very easy. Particularly, you segregate the claims, the how many financial separate, the operational creditor, within operational creditors, raw material separate, service provider separate, and employees separate, and workers are separate, and the bondholders separate in financial creditor, and fixed deposit separate, and debenture holders are separate. And if you separate that one, whatever it is there, you give the checklist, and according to checklist, it is very easy to verify. Gratuity. Once the particular employees are claiming gratuity on account of removal from the service, on account of CIRP, some employees are not required. For that, if 10 years are there, they have to pay the gratuity. Gratuity register is available. Actuarial valuation report is available. Payroll records are available. HR files. If you verify these things, whatever the claims that are received by you for actuarial, then it is very easy. Leave encashment. Suppose some employees you have retrenched. No work, no pay. We don't require manpower. You have retrenched. Whatever the leave is accumulated, that is a privilege leave. They are eligible up to 6 months in some organization, 3 months some organization. You have to verify the HR policy. Leave encashment, leave register to be verified. HRMS system is to be verified. Payroll register is also verified to pay the particular leave encashment. And workman wages. If at all workman wages 24 months are claimed or below that amount, wage register, and up to which date they have worked, attendance register, up to which he has come to the company, and must payroll register, etc. And a provident fund, PF register to be verified. The provident fund register. This provident fund every month, that is employees provident fund organization, EPFO, that is to be remitted. Attendance, the payroll register, EPFO chalanas. Once the EPFO transferred to EPFO organization through online or through banker, EPFO chalanas are available. HRMS records are also. Next, ESI, Employees State Insurance Contribution. For that, a company will maintain ESI register. And based on the eligibility, based on the workers' salaries, and how many people are eligible for ESI, and a payroll register to be verified. ESI chalanas are also, they have to recover from the employees, and on behalf, they have to pay, and they have to recover from the employees, and the total amount to be paid to the employees' state insurance organization. And ESIO. Income tax ledger is available. Income tax assessment file is available. advanced tax register is available, tax audit report is available, ERP tax module is also available. So whenever the income tax dues are there, claims are there, that is to be properly checked with the income tax ledger, income tax assessment file, and the advanced tax register, tax audit report, ERP tax module of the software, that is to be verified. And the GST claims, the GST output register, and the GST input register, GSTR1, GSTR3B, and the electronic credit ledger, and the GST reconciliation statement, and even in ERP also, the GST module is there. You can cross check with this one. TDS payable. Once the TDS, the claims are there, TDS register to be verified, Form 26Q to be verified, General Ledger to be verified, TDS ledger to be verified, excise duty, legacy cases, and excise register, RG1, R register, RPLA register, like that, professional taxes, how many employees are there, and as per professional tax, what is the rate, and the particularly the employees or workers, whatever the professional tax, that is also according to payroll register, their basics pay, all these things are to be taken into consideration. Municipal taxes, whatever the municipal taxes are there, the property tax to be paid, whatever the buildings and other things, and for that you have to verify the fixed assets register, and whether they have claimed properly or not, you have to verify the municipal taxes, electricity charges, utility register is available, particularly the month end opening balance and closing balance, bills generated, verified, all these things, electricity bills filed, expenses ledger, water charges, utility register for water is available, the expense register, insurance premium outstanding. The company insurance premium to be paid. Particularly sometimes the insurance company, they will claim some amount, premium amount. Some of the policies, some very few policies, the insurance company will also give some cushion. You pay later on, initial amount, this one. Insurance register, policy register, vendor register, home buyers claims, customer master register, how many customer for that venture or building, flat allotment register, and booking register, sale agreement register, collection register, receipt register, project ERP, and CRM software, particularly in the real estate, Salesforce, Oracle, CRM, SAP CRM, or a RERA register, all these things are to be verified. And particularly deposits. If the company is mobilized, deposit register is available. Investors register, how many people are they paid the amount, fixed deposit register, etc. And the shareholders, if financial claims arise, registers, particularly the shareholders, if financial claims arise, that is a related party, and the register of members, share transfer, share application register, and the corporate guarantor claims. For that also, the guarantee claims register is available. Board minutes are also available. Contingent liability register is also available. And personal guarantor, legal files, and recovery, and all these things. Sir, మళ్ళీ చేస్తాను కాస్తున్నానండి. Next, personal guarantor recovers, legal files, recovery files, arbitration, award claims, litigation register, legal case register, legal department, MIS management information system, court decree claims, court case register, litigation register. Because of why I told all these things, a rough idea. In your company, in your CIRP, it may be there, it may not be there. But we have to cover all these things. Once you go through the PPT on your own also, then you will get a fair idea, and the quality of admitting the case or rejecting the case will happen. And MSME suppliers claim. Suppose today MSME claims are also to be paid within 30 days or whatever the stipulations are there. And if not paid, then we have to pay interest also. And every financial quarter, we have to submit the claim, they submit the return also in this regard to the ROC, MSC vendor register, purchase register, vendor master, Udyam registration records, etc. Security deposits. Some of the debtors, they particularly the security deposit. Some of the vendors or those who are going to purchase advance payments, etc. That a security deposit register is available. Vendor ledger is available. Customer ledger is also advance from customers. Customer advance register, sales register, customer master is available. Performance security. Particularly if any contracts are given, performance security is asked. Contract register, bank guarantee register, legal files. If the performance is not up to the mark, then the company can invoke the guarantee given by the contractor. Foreign suppliers claims, import register, foreign vendor ledger, letter of credit registers, etc. Loyalty claims, loyalty register, agreement register, expenses register, etc. License fees claims, license register, contract register, etc. Environmental compensation, particularly sometimes the company, the penalty will be levied by the pollution control board or government authorities. The compliance register and the legal register, whether it is a water pollution or contamination of the water or the air pollution or contamination of water or waste management, waste disposal, etc. Related party loans, related party register, loan register, Section 188 register, and board minutes are also is required in case of related parties. Contingent liabilities, contingent liability register, notes to the accounts, audit files, and a legal register. These are the various registers, records, notes that are required to verify the consent claims. All are not applicable wherever this type of suppose the loyalty, they particularly royalty claims are there, not paid by the company. Immediately the royalty register, agreement for royalty, and expenses register that is to be verified. So all are not required, but in almost all companies, various registers, records, ERP software. In the ERP software, some modules are there. You have to verify all these things. Important books of accounts to be verified by the RP. What are the important books? Sir, are you getting my point, sir? Sir.
Yes, sir. We are getting.
Next, irrespective of the category of the claim, the following books of accounts are ordinarily be examined. General ledger. This general ledger is the assets and liabilities. Trial balance, the balances of all accounts. It should be tallied. Journal ledger, journal register. Whenever any purchases or sales are happening, or any expenditure or income is happening in the company, journal we will pass. Once it is a cash book or bank book, once the company we have paid or received by way of cash. Cash means not simply cash, even checks and other things. And if the checks are deposited with banks or purchase book to purchases of the particular various items of the company or sales book and purchase returns also. Once the company is purchased, suppose I take for example the supplier operational creditor filed one bill of exchange invoice and the goods received note and all these things and submitted his claim. You have verified in the purchase book, it is available. Later on, if the quality is not up to the mark, immediately you have to return back the goods. Once you are returned, then it is available in purchase return books. Then this claim to be rejected. Even though at the time of purchases, they have entered in purchases, but later on they have returned on account of quality dispute like that. It is available in the purchase. Some other people, what are the operational creditors, they will submit and now it is in CIRP, nobody is verified and the purchase returns are also happened. They may not have the idea of this one like that. Sales return book and debtors ledger. Particularly, you have to verify the debtors also. Why? Debtors are also assets. The credit policy company has given sold goods on credit to the buyers. That is also an asset. That is also to be recovered. You have to send a notice to them. You please pay the amount immediately. Otherwise, we will file in the court. Creditor ledger is available. Loans, whatever the loans mobilized by the company from various sources, loan register is available. Fixed assets register is also available. Inventory register, how much stock is available? What is the opening stock? What is minus the consumption or add purchases? Remaining closing is available. Cost of records were maintained. So if the company is under cost audit, cost records are also available. Subsidiary ledgers are available. Day book, every day the entries are entered. Journal vouchers, payment vouchers, receipt vouchers, all are debit, credit vouchers are also available. So once one claim is admitted, if at all any doubts are arised, this much information is available in the company. If once one area is missing, second area. Suppose sales book is not available. But a receipt voucher is available, cash receipts from sales available. And important statute registers. You have to verify wherever required. RP should also verify relevant statute register. Register of Companies. Companies Act 2013. Register of Charges. Section 77. Register of members, particularly the members, the equity shareholders, the debenture shareholders, the fixed deposits, or bond holders, or creditors, or debenture holders, register of deposits, the register of contracts are also available. Register of directors and key managerial persons are also available. And a related party transaction register is also available. Register of investment, whatever the investment made by the company, with the full particulars, date of investment, rate of investment, which company, and when the investment made, and loan and guarantees. Fixed register is also available. Statutory tax registers, GST register is available, TDS register is available, Provident Fund is available, employee state insurance also available, labor register prescribed under applicable labor laws, that is also available. ERP accounting and computer softwares. Today, most of the physical books are not available. Depending on the size of the nature of the corporate return, the IT systems and the software should be reviewed by the RP or IRP. Accounting softwares are Tally, one software. Tally Prime is another software. And in that particular software also, how many modules are there, what type of registers, what type of reports that is generated by the Tally or Tally Prime, the book is also available. Busy accounting software, manual is available. Mark ERP software, manual is available. Focus ERP software, manual is available. Miracle ERP software, manual. Why manual to be referred? Suppose you require Creditors list, in which menu it is available. And if you click that one, print will be happen. You can cross check. Fixed assets register, that the manual to be referred, which menu it is available. So for that also, you can guide to the concerned people, because I am not talking about all these things are to be handled by you, but handled by somebody, but cross-checked to be cross-checked by you. And ERP softwares, different companies, they are using different softwares. SAP ECC one software, SAP S/4 HANA another software, Oracle e-business suite another software, Oracle Fusion Cloud ERP another software for ERP, Microsoft Dynamic 365 another software, N for ERP or Ramco ERP or ERP Next or Odoo ERP. Different companies, they are using different softwares. No problem. You call the systems administrator. I require the Creditors ledger. I require the bondholders register. I require the fixed deposit register. I require the bank balance, the bank loans register. Like that, if you ask through that software, they will give the printout. And if you go through that particular manual, small manual book, in that particular software, what are the menus, what are the reports that are available, that is also available. Different companies, they are using the different softwares. Next, human resource. Suppose a payroll is there. For that also, some softwares are there. For payment of the wages, for creating that Form 16, or for creating the pay slips, or etc., etc. SAP Success Factors, another software for HR. Oracle HRMS, another software. Grey HR, only for HR. And Zoho Payroll, only for HR. Kika HR, another HR software. And Darwin Box, another human software, HR department. Whatever the employees and the workers' salaries are there, these softwares are to be verified. CRM, particularly the customers, how many customers you have sold. Data ledger, all are available in Salesforce CRM, SAP CRM, Oracle CRM, Microsoft Dynamics, and Zoho. This CRMs is available in a real estate. When the company is selling the flats to the particular home buyers, this information is available based on the software that is used by the company. Inventory warehouse systems. Inventory warehouse system. If you want to know how much inventory, once the inventory is received and you have to cross-check the purchases and other things, inventory softwares are also available. SAP MM and WM, or Oracle Inventory, or Warehouse Management System, or Barcode RFID Inventory System. Even inventory also, barcode system is there. It is very easy to capture the particular type of inventory in the through inventory barcode also in the inventory register. Document compliance systems, document management system, contract management system, legal case management software, secretarial compliance software, and MCA filings records, and NESL, wherever applicable, authenticated debt records, all are available in the computer system. And additional electronic evidence, bank statement and internet banking records are available. That's why I told You need not ask the banks also. Corporate internet banking facility is there in almost all companies. Email correspondences, email invoice and GST portal data, e-way bills and purchase orders, and digital payments done by the company through RTGS or NEFT or IMPS or UPI or SWIFT for foreign funds, that also available in most of the companies. And information utility, if at all the company is also financial creditors data is approved, the company maintains the information utility that is also available. ROC filings, CERSI registration, income tax GST portal records are also available. Internal statutory audit reports are also available. Secretarial records and board committee meetings are also, minutes are also available. Hence, a robust claim of a verification process requires a resolution professionals to undertake a comprehensive reconciliation between a creditors claims and corporate debtors internal records. Reliance solely on documents submitted by the creditor may lead to incorrect admission of the claims. Don't admit the claims. Based on whatever the kachada documents are submitted by the claimants. Most of the claims are genuine. Some of the claims are wrong claims. Inaccurate determination of voting right. Thereby, it results in inaccurate voting rights, improper constitution of committee of creditors. So that's why the systematically examining the book of accounts are very much required. Statute registers are available. ERP systems, HR payrolls, legal files, tax records, electronic database, the IRP or RP can ensure compliance with the IBBA CIRP regulation, particularly while maintaining the transparency, fairness, and accuracy throughout the insolvency resolution. That's why the day one, when you are occupying the seat, the total records, the particularly IT systems are under your control. Once you are not done that one, then automatically some of the unscrupulous persons, they will change the records also in the computer systems. Thereby, it is a problem. If they delete, then it is a problem. That's why whatever the backups that are required in the IT or physical, all are to be under your custody only. So this is in brief about the end-to-end claims admission. Otherwise, wrong admission leads to complication. And not only complication, wrong claims admission leads to the wrong formation of the committee creditors, their voting rights, etc. So some of the people, on account of due to lack of financial knowledge, they are admitting some claims which are not eligible. Simply claiming the documents is not the criteria. Cross-checking the claims with the available records, available books, available vouchers, and cross-verification with others, all these things are required. Once I purchased some stock, after 1 month, the company has returned the stocks. If the company is under CIRP, based on the purchase, they have claimed means the second leg, once I returned, that is also to be verified. Once it's already returned, the operational creditor claim should not be accepted. So this is in brief about the end-to-end claim verification under CIRP. Any doubts, sir? Hello? Any doubts, sir?
No, sir, please.
So this PPT I am sharing to you, sir, all the participants. and keep it with you. And in case the relevant area is there, go through the relevant area. What are the registers to be verified? What are the documents to be verified? Or what are the vouchers to be verified? And it is gives us some instant information. Instant information. With this, I am concluding. Thank you very much for your patience listening from 10 to 1 o'clock. Thank you, sir. Thank you to ICSI, IIP also.
Thank you, sir. Thank you, sir.
very much, sir, for your insight, sir.
Very nice, sir. Thank you.
Thank you, sir. Thank you very much.
Yes, sir.
Thank you, sir. Thank you.
Thank you so much, sir.
मेरे को ना आईएम के ना सारे एनेक्सर्स जो आपने बनाए थे वर्ड में मेरे को एनेक्शन हाँ मेल कर दो आईएम और एनेक्शन मेरे को मेल कर दो और एनेक्शन आपने आपके पास आए होंगे ना कि इसमें ओपन नहीं हो रहा क्योंकि 105
Participants, shall we start the session? Can we start?
Yes, ma'am. Yes, we can start.
Okay. Good afternoon, all. Now the session will be taken by Vishwajeet Gupta, sir, on
Ma'am, your
topic.
voice is very less. Can you increase your voice? Audio
Now am I
is
audible, sir?
your
Now
audio.
am I audible?
You are audible, but your voice is coming very weak.
Okay, I'm just joining again.
Madam, please speak loudly. Actually, you are speaking very loud. Please
Okay.
speak loudly.
Sir, I am audible now?
Yes.
Okay. Good afternoon, everyone. Now the session will be taken by Vishwajeet Gupta, sir, on the topic end-to-end claim verification during voluntary liquidation. Let me briefly introduce Vishwajeet, sir. Sir is CSIP, law graduate from Kurukshetra University, and pursued the Bachelor of Commerce. He holds more than 25 years of experience as CS in whole-time practice. He remained chairman of Chandigarh chapter of ICSI in year 2021. He also remained on the panel of Mediation and Conciliation Committee of Regional Director of MCA Chennai. He has delivered various lectures in SIP, EDP, and MSOP of ICSI. He has taken lectures in the webinars and seminars also. He has conducted various career awareness programs for CS in various schools and colleges in and around Chandigarh. Now I request you to kindly proceed, please.
Thank you, ma'am. Thank you very much for the nice introduction. Today, I have been given the topic of this voluntary liquidation and the claims under voluntary liquidation, but I'll discuss each and every provision of the voluntary liquidation. Actually, Constitution of India gives right to every citizen of India to practice any profession or to carry any occupation, trade, or business, but freely, but subject to certain restrictions imposed by the state, such as carrying on any unlawful activity, obtaining of certain approvals or licenses. This is required to start a business, but any citizen of India can start or commence any business at any time. But this right to carry on business also includes the right to close the business at any point of time, because the state cannot compel any citizen of India to run any business which is against his will or wish. But no, as I said, that no right is absolute. The right to close of the business is also not absolute, and it is subject to certain restrictions, because you cannot close the business without paying the liabilities, without realizing all the assets, and you cannot close the business with liabilities. So you will have to pay all the liabilities, then you can close the business, and you will have to certainly surrender all the registrations and cancel all the registrations also. So this is the these are the restrictions which have been imposed by the state, that you cannot close the business without paying all the liabilities, without canceling all your registrations. Now, what is voluntary liquidation? Voluntary liquidation is a self-imposed winding up and dissolution of the corporate person that has been approved by its shareholders, partners, contributors. Such a decision will happen once an organization leadership decides that the company has no reason to continue. If the shareholders and the owners of the company, they decide that the company that they are going to close the company, then they can close the company voluntarily. This is called voluntary liquidation. It is not a compulsory winding up by order of court, because it is voluntarily winding up, and the owners of the corporation, the corporate person, they decide that company is going to be closed. The primary objective of the voluntary liquidation of corporate person is what? To terminate all its operations, sell off its assets, and dismantle its corporate structure, and to ensure that assets of the corporate person are distributed fairly among its creditors and shareholders in a systematic manner, while also promoting a swift and efficient exit from the business. So this is the main primary objective of the voluntary liquidation. Now coming to the applicable provisions of the voluntary liquidation. Under the Companies Act 2013, Section 304 to Section 323 were dealing with the voluntary liquidation, but they were not notified. And Section 255 of the Insolvency and Bankruptcy Code 2016, it provides that Companies Act 2013 shall be amended in a manner specified in the 11th schedule. And 11th schedule, by virtue of the notification of the 11th schedule of the code with effect from 15th November 2016, various winding up provisions of the Companies Act 2013 were amended, and voluntary winding up sections under Companies Act 2013 were omitted, and the same have been incorporated under Insolvency and Bankruptcy Code 2016. The central government on 30th March 2017 notified Section 59 of the IBC 2016, which deals with the voluntary liquidation of the corporate person, and it came into effect with effect from 1st April 2017. And on the very next day, that is on 31st March 2017, the IBBI notified the IBBI Voluntary Liquidation Process Regulations 2017 with effect from 1st April 2017. So the provisions of Section 59 as well as the IBBI Voluntary Liquidation Process Regulations 2017, they came into effect with effect from 1st April 2017. Now, definition of corporate person is given under Section 3, subsection 7 of IBC. Corporate person under the code means companies incorporated under the Companies Act 2013 or any other previous Companies Act. Limited liability partnerships formed and registered under the LLP Act 2008, and any other person incorporated with limited liability under any law for the time being in force, such as insurance, banking, electricity supply, and other companies governed by special act for the time being in force, but shall not include any financial service provider. Financial service provider companies, they are not included in the corporate person, so they are not eligible for voluntary liquidation as defined under Section 3, subsection 17. Any other person incorporated with limited liability under any law for the time being in force, that the definition is given under Section 2, subsection B and D of the IBC, which states that any other company governed by any special act for the time being in force, and such other body incorporated under any law for the time being in force as the central government may notify. So these the three types of corporate persons, they are eligible for the purpose of voluntary liquidation. Companies, limited liability partnerships, or any other person incorporated with limited liability under any law. So these three are eligible, or three corporate persons are eligible for voluntary liquidation. Now, conditions of voluntary liquidations. Conditions of voluntary liquidation: a corporate person who intends to liquidate itself voluntarily. Section 59 deals with this, the subsection 1 deals with this provision, that if a corporate person who intends to liquidate itself voluntarily and has not committed any default, means that corporate person is fully solvent, may initiate voluntary liquidation proceeding. These are the only two conditions which have been given under Section 59 of the IBC. Now, default means non-payment of debt when whole or any part or installment of the amount of debt has become due and payable and is not paid. So that is called default by any debtor or corporate debtor, as the case may be. So this is the default, the definition of default given under section 3 subsection 12 of IBC. Now this definition of debt is also given under section 3 subsection 11 of IBC, which states that a liability or obligation in respect of claim which is due from any person and includes the financial debt and operational debt. So that is called debt. The debt definition is given, and default definition is also given in the IBC, and which relates to the second, the company has not committed any default, means fully solvent. Now, section 59 subsection 2 has been amended with effect from 26th May 2026. Completion of voluntary liquidation process. The voluntary liquidation process of the corporate person under subsection 1 shall meet conditions and procedural requirements. Meet conditions, procedural requirements which are given in the law section 59 as well as the voluntary liquidation process regulations, and be completed within such period which shall not be more than 1 year as may be specified. Now, prerequisites of the initiation of voluntary liquidation process. Prerequisites are what? A declaration from the majority of directors of the company or designated partners of the limited liability partnership or individuals constituting the governing body in case of other corporate persons. 3 types of corporate persons we have just discussed. And this declaration must be duly verified by an affidavit that they have made inquiry into the affairs of the corporate person and formed an opinion that either corporate person has no debt or it will be able to pay its debts in full out of the sale proceeds of the assets to be sold in liquidation. So they will give this declaration duly verified by an affidavit. And second condition is that a corporate person is not being liquidated to defraud any person. And last one, that corporate person has made sufficient provisions to meet the obligations arising on account of pending proceedings or assessments before the statutory authorities and pending litigations in respect of corporate person, like setting up of a trust or escrow account. Now, such declaration shall be accompanied with the following documents. So this is the declaration which the majority of the directors of the corporate person or the designated partner of the limited liability partnership and individuals constituting the governing body in case of other corporate person, they have to give this declaration, and along with this declaration they will annex the following documents. Number 1, the audited financial statements and the record of business operations of the corporate person for the previous 2 years if the company is in operation for more than 2 years. If the company is in operation for less than 2 years, then for the period since incorporation, whichever is later. So they will have to annex these documents, financial statements and record of business operations with the declaration of solvency. A valuation report of assets of corporate person, if any, from the registered valuer. So if the corporate person is having assets, movable assets or immovable assets, then valuation report from the registered valuer that is required to be annexed with the declaration. The disclosure that pending proceedings and assessments before the statutory authorities and pending litigations in respect of the corporate person. So in declaration, they will have to annex with the declaration the disclosure about the pending proceedings. There are pending proceedings before any statutory authorities or assessment before any statutory authorities, or if there are any pending litigations, they will have to be disclosed, and the list of those cases and the list of those proceedings, they will have to be annexed with the declaration. Now, declaration to list each of the debts. Regulation 3, Regulation 4 and 5. Declarations shall list each debt of the corporate person as on the date of making declaration and state that CP will be able to pay all its debts in full from the proceeds of the assets to be sold in liquidation. So this declaration is also required to be given. The declaration shall also provide that the corporate person has made provision for preservation of its records after dissolution. After dissolution of the company, the corporate person has to make a provision for preservation of the record. That company that the records will be preserved for a specific period of time, which will be given in the regulations. I will discuss later on. Now, prerequisites of the initiation of voluntary liquidation. Section 59, subsection 3 and regulation 3 says, within 4 weeks from such declaration, which is given by the majority of the directors or the directors or the designated partners or the individuals, there shall be a special resolution. After declaration of solvency, within 4 weeks, the corporate person will have to pass special resolution of the members or resolution passed by the special majority of the partners or contributories requiring corporate person to be liquidated voluntarily. So they will have to pass this special resolution or the resolution by special majority that the corporate person to be liquidated voluntarily and appointing an insolvency professional to act as liquidator. So they will have to mention the name of the person that to whom they are going to appoint as liquidator, the name of that insolvency professional. So from these regulations, it is clear that only insolvency professional can be appointed as the liquidator and no other person can be appointed, because under the Companies Act, the provisions were different, but now under IBC, the appointing of insolvency professional to act as liquidator is must. A resolution of the members, partners, contributories of the corporate person requiring the CP to be liquidated voluntarily as a result of expiry of the period of its duration, if any, fixed by the articles or constitutional document. If the articles of the constitutional documents prescribe a period of duration that after such period of time the corporate person will be liquidated, then only a resolution of the member, simple resolution, that is required, not special resolution is required. And on occurrence of any event in respect of which the article or constitutional document provide that CP corporate person shall be dissolved, as the case may be. So if there is any occurrence of any event which is provided in the articles or the constitutional document, then only a resolution is required to be passed by the members, partners or contributories. And third one is appointing insolvency resolution professional to act as liquidator. In case of corporate person owes any debt to any person, if there are any creditors in the corporate person, then creditors representing 2/3 value in the of the total debt, they will approve the resolution within 7 days from the passing of such resolution. Means within 4 weeks, the corporate person will have to pass special resolution or resolution, as the case may be. And if the corporate person is having creditors, then after passing of the resolutions or special resolution, the corporate person will also approve that resolution with 2/3 in value of the total debt. Now, occurrence of an event. What is the meaning of occurrence of event? We will understand with the examples. The entity was formed with a specific objective, and now that that objective has been fulfilled. It is provided by the articles that entity should be liquidated on occurrence of an event, and that event has occurred. So we will understand with the examples. The company was set up for a project for lasting 5 years. That after 5 years, the company will be liquidated. So if it is provided in the articles or constitutional documents, that then after 5 years, the company will be liquidated. The company was incorporated to develop a property. company was incorporated to develop a specific property, and after the development of that property, the company will be liquidated if it is provided in the articles or constitutional document. Then company will be liquidated after the completion of the project or development of the property. It is unviable to carry on its own business if there is non viability of continuing with the business presently carrying on by the corporate person. Then they can the corporate person can pass a resolution or special resolution, as the case may be. If it is providing the articles, then special resolution, otherwise special resolution. Parent company decides to shut down or divest a subsidiary as a part of the restructuring plan. So these are the events if occurred, and these are provided in the articles and the constitutional document. Then the company can go, corporate person can go for voluntary liquidation process. Contributory definitions given as per regulation 2 sub-regulation B. Contributory means a member of the company, partner of the limited liability partnership, and any other person liable to contribute towards the assets of the corporate person in the event of its liquidation. So this is the definition given under regulation 2 sub-regulation B, that what is the contributory is, because we have discussed about the contributory, that regulation 3, 1 and 2 into a resolution of the members, partners or contributories. Just a special resolution of the members or resolution passed by the special majority of the partners contributories. So contributory meaning what? Contributory means member of the company, partner of the limited liability, and any other person liable to contribute towards the assets of the corporate person in the event of its liquidation. So these persons are treated as contributories. Now, resolution to be informed to ROC and Insolvency and Bankruptcy Board of India. So when this corporate person passes the special resolution or the resolution, as the case may be, it shall inform the Registrar of Companies and the Insolvency and Bankruptcy Board of India about the resolution to liquidate the company within 7 days. Within 7 days, it is required to be, the company is required to, the corporate person is required to inform to the ROC as well IBBI, or subsequent approval by the creditors, as the case may be. Now, how to inform the ROC? Earlier, the word given in the law as well as the regulations was the to notify, resolution to be notified to ROC. But now the word has been given to inform to ROC. Now, how to inform to the Registrar of Companies? Special resolution is required to be filed with the Registrar of Companies in form MGT 14 given under the Companies Act 2013 and form GNL 2. And in this form, the declaration of solvency, audited financial statements of the last 2 financial years, record of the business operations of the last 2 financial years, and valuation report, if any. These are required to be annexed with these forms. And how to inform IBBI, Insolvency and Bankruptcy Board of India? By filing form VL1, VL2, VL3 and VL4. These are the form prescribed by the IBBI through circular dated 28th June 2024. Before that, we used to send the documents through email, but now no email is required to be given to the registrar of to the IBBI. Only these 4 forms are required to be filed within the timelines prescribed in these forms. I'll discuss in the next slide what are the timelines given by the IBBI. Regulation 41A provides for filing of the voluntary liquidation forms. Form VL1, this includes the details of the corporate person, details of the voluntary liquidation process. So this form is required to be filed on or before 10th day of the second month after the public announcement. So when you will be appointed as liquidator of the company, you will have to give public announcement, which I will discuss later on in these my slides. Immediately after filing the after giving the public announcement, publishing in the newspaper. So if you are publishing in the newspaper in the month of July, then you will have to file this form before 10th of the August, second month, 10th of the second month of after the public announcement. So you will have to suppose if you are publishing in the month of July, then you will have to file this form before 10th of the August. VL2 form, details of the meetings of the contributories with the reasons for delay in process, details of the replacement of liquidator, if any, etc. So if you have if the liquidator has delayed in meeting the timelines given in the under the regulations, which I will discuss later on, that is 290 days or 270 days, right? Or if there has been any replacement of the liquidator, then form VL2 is required to be filed with the Insolvency and Bankruptcy Board of India. So this form is required to be filed on or before 10th day of the subsequent month after the meeting of the contributors or replacement of the liquidator. Now VL3 form is required to be filed. In this form, details of the dissolution application. So after the completion of the voluntary liquidation process, then the liquidator is required to file an application for dissolution with the adjudicating authority. Details of the unclaimed proceeds, details of the realization and distribution made to the stakeholders, details of the pending litigations, detection of fraud or insolvency, if any, etc. So this form is required to be filed on or before 10th day of the subsequent month after submission of the dissolution application or of the corporate person, or withdrawal or suspension of application for voluntary liquidation process to the adjudicating authority. Last form is form VL4. In this form, details of order of dissolution. So after getting the order of the dissolution from the adjudicating authority, so this includes the details of the distribution of proceeds, receipt and payments, etc., etc. So this is required to be filed on or before 14th day of passing the order for dissolution. So this is very very much required to understand that these timelines are required to be adhered to. Otherwise, there will be a penalty and there will be a problem for the insolvency professionals who have been appointed as voluntary liquidators. Sorry. So the liquidator shall file these forms along with the enclosures thereto on the electronic platform of the Insolvency and Bankruptcy Board of India as per the timelines stipulated against each form. The liquidator shall ensure that forms and enclosures filed under this regulation are accurate and complete. Please ensure that filing of form under this regulation after the due date of submission, whether by correction, updation or otherwise, shall be accompanied by a fee of 500 rupees per form for each calendar month. So this is the penalty which will be charged from the liquidator if the liquidator makes any correction, updation or otherwise in the form and after the due date. The liquidator shall be liable for any action which the board may take as deemed fit under the code or any regulation made thereunder, including refusal to issue or renew authorization for assignment, for failure to file a form along with the requisite information and records, inaccurate and incomplete information or records filed in or along with the form, or delay in filing the form. So even if you have filed the form delayed, even then the liquidator shall be liable to any action from the board, including refusal to issue, renew authorization for assignment. So please take care of these provisions while doing voluntary liquidation process. But no, what are the advantages of filing these forms with the IBBI? First advantage is to boost the efficiency and effectiveness of the voluntary liquidation process, allowing liquidators to conveniently access to submit form online, reducing delays and enhancing efficiency, decreasing the chances of errors and omissions, ensuring more accurate and reliable information. So these are the advantages of filing these forms with the IBBI. Now, what would be the liquidation commencement date? Liquidation commencement date, subject to approval of creditors by 2/3 in value, the liquidation shall be deemed to have commenced from the date of passing of the resolution. So the date on which they pass the resolution, then or special resolution, the liquidation commencement date LCD will be counted from that date. Now, application of chapter 2, 3 and chapter 7. The provisions of clause B of section 18 of chapter 2 relating to receive and collate all claims submitted by the creditors to the liquidator pursuant to the public announcement made under section 13 and 15. So this provision has been added with effect from 26th May 2026. Section 35 to 53 of chapter 3, that is these provisions are relating to liquidation process, and section 68 to section 77 of chapter 7, offenses and penalties. These shall apply to the voluntary liquidation with such modification as may be necessary. The effect of liquidation. Section 4, Regulation 4 says, these corporate persons shall cease to carry its business from liquidation commencement date. From the liquidation commencement date, the corporate person shall be deemed to shall cease to carry on the business, except for the beneficial winding up of its business. So the business can be continued for the beneficial winding of the winding up of the of its business. Only that can continue. Otherwise, the CP shall cease to carry on the business operations. CP shall continue to exist until it is dissolved, because this is only winding up. Dissolution shall be ordered by the adjudicating authority. So once the adjudicating authority pass the order for dissolution of the company, the dissolution will be filed with the Register of Companies as well as IBBI in form VL 3, which we have discussed. So from that date, the company will be treated as dissolved. So the status of the company at the MCA side will be shown like this: dissolved under section 59 subsection 8. So your status will be shown at the MCA side like this. Now, for the purpose of voluntary liquidation, the appointment of liquidator, that is insolvency professional, which we have discussed, that is required. The corporate person shall appoint insolvency professional as liquidator by passing the resolution, and may be replaced by appointing another insolvency professional as liquidator by passing the resolution. SR, special resolution, or ordinary resolution as per the section 59 subsection 3C or regulation 3 sub-regulation 1, which we have discussed, that the corporate person will appoint insolvency professional as liquidator, and the liquidator may be replaced by appointing another insolvency professional as liquidator. The resolution appointing insolvency professional shall contain the terms and conditions of the appointment and remuneration payable to him. So all these terms and conditions and the remuneration to be payable to the liquidator, that will be mentioned in the resolution or special resolution as the case may. And the remuneration which is payable to the insolvency professional as per the resolution, that shall form part of the liquidation cost. The insolvency professional shall intimate the Insolvency and Bankruptcy Board of India about his appointment within 7 days of the appointment. Earlier it was 3 days, but now it has been increased to 7 days. So it is the duty of the liquidator or the insolvency professional to intimate to the Insolvency and Bankruptcy Board of India within 7 days of his appointment. Eligibility for appointment of liquidator, and it is given under Regulation 6 of the Voluntary Liquidation Process Regulations. Insolvency professional and every partner or director of the insolvency professional entity must be independent of the corporate person. That person should not be or any be that IP or the partner of or director of IPE should not be related or relative or related party to the corporate person in any way. He must be independent. Test of independence is what? He must be eligible to be appointed as independent director on the board of the corporate person as per section 149 of the Companies Act 2013 and is not a related party to the corporate person. And the related party definition is given under section 5 subsection 24 and 24AA of IBC. Has not been an employee, proprietor, partner of a firm of the auditors or secretarial auditors or cost auditors of the corporate person. He should not be employee in any at any point of time in last 3 years. In case of legal and consulting firm that has or had any transaction with the corporate person contributing 10% or more of the gross turnover of such firm. So if a legal or consulting firm is having any transaction with the corporate person and the gross turnover of that legal consulting firm is receiving more than 10% of the gross receipts from the corporate person, that will be treated as non-independent. If less than 10%, then will be treated as independent of corporate person. So at any time in the last 3 years. So this is the test of independence. And if IP or IPE of which he is a partner or director is not restrained by the order of the Insolvency and Bankruptcy Board of India, by the board. If they have not been restrained, only then they are eligible, otherwise they are not eligible. Liquidator shall disclose the existence of any pecuniary or personal relationship. If there is any pecuniary or personal relationship with the corporate person, then liquidator shall disclose that pecuniary or personal relationship or any of its stakeholder as soon as he becomes aware of it to the board and the registrar of companies. An IP shall not continue as liquidator if the IPE of which he is a director, partner, or any other partner or director of such IPE represents any other stakeholder in the same liquidation. So that IP shall not continue and that will be treated as non-independent. Now, after the appointment of IP, the liquidator shall make a public announcement within 5 days from his appointment. Please take care of these timelines which is given in the regulations. Otherwise there will be a contravention, right? Now, public announcement is required to be given in Form A. Earlier it was given in Form A, Schedule 1. Now Schedule 1 that has been deleted, and now in Form A. These forms have been notified by the by the Insolvency and Bankruptcy Board of India, and these have been just hold on, I'll show you these the forms. These are the forms. Just hold on, I'll share with you. These are the forms specified by the Insolvency and Bankruptcy Board of India through circular dated 2nd June 2026. So these are the forms. Form A, public announcement. Form B, claim approved by the operation creditors. Except workmen and employees. Proof of claim by the financial creditors. Form C, proof of claim by the workman or employee. Form D, proof of claim by the authorized representative of workman or employee. Form E, proof of claim by the other stakeholders. Form F, deposit of unclaimed dividend and oblique or undistributed proceeds into corporate voluntary liquidation account. Form G, compliance certificate. Form H, withdrawal of corporate voluntary liquidation account. Form I, and now this has been added in regulation 42 has been added, intimation for termination of voluntary liquidation proceeding. Form J. So these have been these form have been prescribed by the Insolvency and Bankruptcy Board of India. Now the schedule 1 that has gone. Now coming to the main public announcement, which we were discussing about the public announcement that is required to be given in Form A under Regulation 14 of the Voluntary Liquidation Process Regulations. Liquidator shall make public announcement within 5 days of his appointment in 2 newspapers. One is English newspaper and other is regional language in wide circulation at the location of the registered office of the corporate person and principal office of the corporate person and any other location where in the opinion of the liquidator the corporate person conducts material business operations. So at all these 3 places the liquidator is required to publish in 2 newspapers, one in English and other is the regional language of that place where the publication is being made, and on the website of the corporate person. If the corporate person is maintaining the website, then it is also required to be published on the website of the corporate person and on the website of the designated by the board for this purpose. If the Insolvency and Bankruptcy Board of India designated the website, then on that website the liquidator is required to publish the make the public announcement. The purpose of the announcement is what? The purpose of announcement is to call the stakeholders for submission of their claims as on the liquidation commencement date and provide the last date for submission of the claims, which shall be 30 days from the liquidation commencement date. So within 30 days, it is given in the form itself that within there you will have to give the last day before which the stakeholders may file their claims with before the liquidator. Now at this stage, when you will make public announcement in the newspapers, you will have to file Form VL1 with the Insolvency and Bankruptcy Board of India. Form VL1 includes the details of the corporate person and details of the voluntary liquidation process. Form VL1 is to be filed at the IBBI site on or before 10th day of the 2nd month after the public announcement. Right? After login at the Insolvency and Bankruptcy Board of India site, go to the dashboard. You will have to go to the dashboard, select Voluntary Liquidation Forms, VL forms, Fill reasons for voluntary liquidation and liquidation commencement date. After that, select form VL1 and start filling form VL1. Right? So you will have to file, you have to form VL1 with the IBB. Please stick to the timelines, otherwise there may be a problem. Notice to the concerned adjudicating authority. It is not written in the regulations, but it is a regular practice. It is that notice under section 178 of the Income Tax Act 1961 provides that notice of appointment is to be given to the concerned assessing officer within 30 days. It is given in the Income Tax Act, not in the in section 59 of the VLT regulations. Notice of appointment is required to be given to the concerned assessing officer within 30 days. Within 3 months, assessing officials shall notify the amount of tax payable by the company. Liquidator cannot part with any assets of the company without prior permission of the principal, Chief Commissioner of Income Tax, Chief Commissioner of Income Tax, Principal Commissioner of Income Tax, or the Commissioner. Any contravention of the provisions, the liquidator shall be personally liable to pay tax of the company. But only the first provision, notice of appointment, is required to be given within 30 days, and that is required to be given, and the provisions of this section shall have effect notwithstanding anything to the contrary contained in any law for the timing in force, except the provisions of the Insolvency and Bankruptcy Code of India, Code 2016. So on the liquidation process, voluntary liquidation process, or the liquidation process under IBC, these provisions are not applicable. But as a matter of practice, we used to give notice of the appointment to the concerned assessing officer. If the assessing officer is having any pending dues against the corporate person, they can file their claim with the liquidator. Now, general circular has been issued by the Insolvency and Bankruptcy Board of India with on 15th November 2021. And why this general circular? It is clarified that as per the provisions of the code and the regulations read with regulation section 178 of the Income Tax Act 1961, an insolvency professional handling voluntary liquidation process is not required to seek any no objection certificate or no due certificate from the Income Tax Department as a part of compliance of the said process. So as liquidator, we are not required to seek any NOC or any no due certificate from the Income Tax Department. Just as a matter of practice, we used to give to the Income Tax Department the notice of our appointment, and if they have any claim, because you have make publication in the newspaper, and that is a due service to the general public, that if any person is having any claim, they can file the claim with the liquidator within the prescribed time of 30 days. Now, Regulation 10 talks about the registers and books of accounts. If the books of accounts of the corporate person are incomplete on the liquidation commencement date, the liquidator shall have them completed with all convenience fee. Books of accounts, if incomplete, then it is the duty of the liquidator to have them completed with all convenience fee. Liquidator shall keep the receipt of all the payments made or expenses incurred by him. If you have made any payment or incurred any expenditure, every receipt is required to be secured, because the voluntary liquidation process account is required to be audited as per the regulation, which we will discuss later on. So, what are the registered books of accounts are required to be maintained? Cash book, ledger, bank ledger, register of fixed assets and inventories, securities and investment register, register of book debts and outstanding debts, tenants register, suits register, decree register, register of claims and dividends, contributories register, distributions register, fee register, suspense register, documents register, books register, register of unclaimed dividends and undistributed proceeds, such other books or registers as may be necessary to account for transaction entered into by him in relation to the corporate person. So these all books and register are required to be maintained by the liquidator. Now, for the purpose of voluntary liquidation process, the liquidator can engage the professionals to assist him as per regulation 11 of the voluntary liquidation process regulations. The liquidator may engage professionals to assist him at the reasonable remuneration, not at the higher remuneration, reasonable remuneration, and such remuneration shall form part of the liquidation cost. The liquidator shall not engage a professional who is his relative or related party of the corporate person, as we have discussed as given under section 5 subsection 24 and 24A, or has served as an auditor to the corporate person at any time during the 5 years preceding the liquidation commencement date. Liquidation commencement date preceding 5 years. If a person, if a professional has served as auditor of the corporate person, so that will not be engaged by the liquidator. Professionals engaged or proposed to be engaged shall disclose the existence of any pecuniary or personal relationship with any of the stakeholders or corporate person as soon as he becomes aware of it to the liquidator. So if any professional who has been engaged by the liquidator for the purpose of voluntary liquidation process, he comes to know later on that he has any pecuniary or personal relationship with any of the stakeholders of the corporate person, then he will disclose to the liquidator immediately after coming to the knowledge. Now, assistance by stakeholders. Regulation 12 has been amended with effect from 2nd June of 2026. Earlier it was consultation with the stakeholder. Now it has been amended to the assistance by the stakeholders. The stakeholders shall extend all assistance and cooperation to the liquidator to complete the liquidation of the corporate person. So they will extend all the assistance and cooperation to the liquidator. Liquidator shall maintain the particulars of any consultation with the stakeholders. So whatever the liquidator will discuss with the stakeholders, so he will maintain the particulars of that consultation under regulation 12 subregulation 2. Now, extortionate credit transactions. Regulation 13 says extortionate credit transaction under section 50 subsection 1 of the Insolvency and Bankruptcy Code 2016 means where the terms of receiving financial or operational debt within 2 years preceding the insolvency commencement date, means liquidation commencement date, require the corporate person to make exorbitant payment in respect of the financial or operational debt received, or are unconscionable, means exorbitant under the principle of law relating to contracts. So if the payments are exorbitant, so they will come under the extortionate credit transaction under section 50 subsection 1 of IBC. Section 50 subsection 2 says the board may specify the circumstances in which transaction shall be covered under section 50 subsection 1. Any debt extended by the person providing financial services which is in compliance with any law for the timing in force in relation to such debt shall in no event be considered as extortionate credit transaction. They will not be treated as extortionate credit transaction if they have been done in compliance with the any law for the timing in force. Now, coming to the claims, chapter 5 deals with the Claims Regulation 15 to 19. If a person who claims to be a stakeholder shall provide his claim for debt or dues to him, including interest, if any, on the liquidation commencement date. So if a person who claims to be the stakeholder, he will have to prove his claim for debt or dues to him, including interest, if any, in proof of claim to be sent in the following manner. In case of operational creditor, other than the workman or employee, he shall submit the proof of claim to the liquidator in person, by post, or electronic means through email, etc. in Form B. Earlier it was Schedule B, but it has been amended with effect to 2nd June 2026. That in Form B, he will file the his claim with the liquidator. Now, in case of financial creditor, he shall submit the proof of claim to the liquidator in electronic form only, not in person, not by post. In electronic means in Form C. Form C has been prescribed under Regulation 17, Sub-Regulation 1. In case of workman or employee, they will submit their claim, their proof of claim to the liquidator in person, by post, or electronic means in Form D under Regulation 18, Sub-Regulation 1. In case of numerous workmen or employee, if there are numerous workmen or employee, because they are they are illiterate persons, or they are not so well versed with the provisions, or they cannot fill the form, so an authorized person representative may submit one proof of claim for all such dues on their behalf in Form E. Person claiming to be stakeholders other than the aforesaid, if a person doesn't fall in the category which we have discussed above, then he or she will submit the proof of claim to the liquidator in person, by post, or electronic means in Form F. Now, basis of proof of claim is one. On what basis and what proof they will have to annex with these forms. In case of operational creditors, the existence of debt may be proved on the basis of records available with the information utility, contract for supply of goods or services with the corporate person, along with the invoice demanding the payment for the same to the corporate person, order of the court or tribunal that has adjudicated upon the non-payment of debt, if any, and financial accounts of the corporate person, showing that they have not received any payment from the they have not paid any payment to the creditors. So if they have any financial accounts of the corporate person and they have confirmed that, then they can also submit these financial accounts to the liquidator. In case of financial creditors, the existence of debt may be proved on the basis of records available with the information utility or financial contracts supported by the financial statement. If there is any financial contract, record evidencing that amount committed by the financial creditor to the corporate person under a facility has been drawn by the corporate person. So the financial creditor will also submit financial statements showing that the debt has not been repaid, and order of the court or tribunal that has adjudicated upon the non-payment of debt, if any. In case of workman or employee, the existence of debt may be proved on the basis of records available with the information utility or proof of employment, such as contract or of employment for the period of claim, notice demanding payment of unpaid amount, or any other proof that payment has not been made, any other order of the court or tribunal that has adjudicated upon the non-payment of debt, if any. Now, liquidator shall admit the claims of the workmen or employees on the basis of books of accounts of the corporate person if such workman or employee has not made any claim. So if workman or employee has not made any claim, then liquidator shall admit the claims of the workmen or employees on the basis of books of accounts. If the books of accounts of the corporate person provides that they will have to make the payment to the workmen or employees, then liquidator shall admit the claims on the basis of the books of accounts. In case of other stakeholders, other than the which we have discussed above, the existence of debt may be proved on the basis of the records available with the information utility, documentary evidence of the notice demanding payment of unpaid amount, or bank statement of the claimant showing that the claim has not been paid, along with the affidavit that documentary evidence and bank statements are true, valid, and genuine. Documentary or electronic evidence of his shareholding. If the person is shareholder, then documentary evidence or electronic evidence of the shareholding means share certificate or allotment letter, whatever. Order of the court or tribunal that has adjudicated upon the non-payment of debt, if any. Now, proof of security interest, Regulation 20 says that existence of security interest may be proved by a secured creditor. If a creditor is secured, then the security interest can be proved by providing records available with the information utility, certificate of registration of charge issued by the registrar of companies, proof of registration of charge with the Central Registry of Securitization, Asset Reconstruction and Security Interest of India, other relevant documents which adequately establish the security interest. So these documents can be annexed with the required form by the secured creditors for proving the existence of security interest. The proof of now registration with the CIRP is required when secured creditors, NBFC, bank or financial institutions, they creates a security interest over the borrower's asset, and such security interest is registrable under the SIRP framework. So they will have to get it registered with the CIRP. It is required only in specific cases, just like mortgage hypothecation prescribed under the SIRP Act 2002 and Central Registry rules. The obligation for registration of charge is primarily with the secured creditor, and the borrower oblique company is generally not responsible for filing the register, because borrower company is required to file with the Register of Companies within 30 days Form CSG1 under the Companies Act 2013. So it is the obligation of the secured creditor to get it registered with the CIRP. Production of bill of exchange and promissory notes. No, if a stakeholder is having bill of exchange or promissory note, then he can prove a debt in respect of the bill of exchange or promissory note or other negotiable instrument on or security of like nature for which CP is liable. Corporate person is liable to pay. Such instrument shall be produced before the liquidator before the claim is admitted. Substantiation of the claim. Substantiation, liquidator may call for such other evidence or clarification as he may deem fit from the claimant for substantiating the whole or part of its claim. Now, cost of proof of claim. The claimant shall bear the cost of proving its claim. It is the duty cast upon the claimant that he will bear the cost of proving his claim. Cost of verification and determination of the claim incurred by the liquidator shall be part of the liquidation cost. So if the liquidator incurs any cost for verification and determination of the claim, then that will be treated, that will be the part of the liquidation cost. If the claim is found to be false, if any person files a claim before the liquidator and the liquidator found that claim to be false, then liquidator shall endeavor to recover that costs incurred for verification determination of the claim from such claimant and shall provide the details of such claimant to the Insolvency and Bankruptcy Board of India. Determination of the quantum of claim. Regulation 24 says where the amount claimed by the claimant is not precise, is not clear due to any contingency or any other reason, then the liquidator shall make best estimate of the amount of the claim based on the consultation with the claimant and the corporate person and the information available with him. So he will quantify that claim and determine that claim of the person of whom the claim is not precise. Regulation 25 deals with the valuation of debt in foreign currency. If any debt is in foreign currency, then claims denominated in any foreign currency shall be valued in Indian currency at the official exchange rate of on the liquidation commencement date. So whatever will be the official exchange rate on the liquidation commencement date, on that official exchange rate, that amount will be converted into Indian currency. And official exchange rate means the reference rate published by the Reserve Bank of India or derived from such reference rates. Now, periodical claims. In case of rent, because it is a periodical payment, interest, or such other payments of periodical nature, persons may claim only for an amount due and unpaid up to the liquidation commencement date only, not after that. Because the liquidation will continue after the liquidation commencement date, so they can claim the rent, interest, or such other periodical payment up to the liquidation commencement date only, not after that. Debts payable at future time will have to be calculated at the liquidation commencement date. So if any person may prove a claim whose payment was not yet due and it is due after the liquidation commencement date, then the person is entitled to distribution in the same manner as any other stakeholder as per the formula. This formula is given in the regulations, and you can calculate the present value of the future claim, and you can pay that claim on the as on the liquidation commencement date. Now, mutual credits and set off. In case of mutual dealings between the corporate person and any other party, the sums due from one party shall be set off against the sum dues from the other to arrive at the net amount payable to the corporate person or the other party. So you can set off with each other, and the net amount payable, the claim will be filed with the liquidator. Now, submission and updation of claims. Regulation 28A has been added with effect from 2nd June 2026. A person who claims to be a stakeholder shall submit its claim on or before the last date mentioned in the public announcement. So but the date mentioned in the public announcement, before that date, the stakeholder will have to submit its claim. The stakeholder shall update its claim as and when the claim is paid or satisfied, partly or fully, from any source, in any manner, after the liquidation commencement date. So after the liquidation commencement date, if the person receives any amount, partly or fully, from any source, then the stakeholder will have to update its claim with the liquidator. The stakeholders must immediately inform the liquidator and reduce the amount claimed accordingly. Right? Now, verification of claims, Regulation 29. Regulation 29 deals with the verification of claim. Liquidator shall verify the claims within 30 days from the last date of the receipt of the claims. From the last date which is mentioned in the public announcement, from that date, within 30 days from that date, the liquidator shall verify the claims. After verification, the liquidator may either admit the claim or reject the claim in whole or in part, as the case may be. Provided that where the liquidator rejects the claim, he shall record in writing the reasons for such rejection. In writing, that is required to be made. Liquidator shall communicate his decision of admission or rejection of the claim to the stakeholder within 7 days of such admission or rejection of the claim. So he will have to communicate to the concerned stakeholder within 7 days of the admission or rejection. Creditor may approach the adjudicating authority against the decision of the liquidator. The creditor or may approach to the NCLT regarding the rejection of claim or against the decision of the liquidator. Regulation 30 deals with the list of the stakeholders. Liquidator shall prepare a list of the stakeholders on the basis of proof of claims submitted and accepted, with amount of claim admitted if applicable, extent to which debts or dues are secured or unsecured, details of the stakeholders, and proof of claim admitted or rejected in part or rejected in wholly. So we will prepare a list of stakeholders on the basis of proof of claims which have been submitted and accepted, the amount of claim admitted, extent to which the debts dues are secured or unsecured, details of the stakeholders, proof of claims admitted or rejected in part or wholly. So these information are to be written in the list of the list of stakeholders. Liquidator shall prepare the list of stakeholders within 45 days from the last date of receipt of claims. So these please take care of the timelines given in the regulations. So within 45 days means within 30 days the claims are to be submitted to this liquidator. Next 30 days the liquidator shall verify the claims, and then in next 15 days the liquidator shall prepare the list of the stakeholders. Provided that where no claim is received till the last date of receipt of claim by the liquidator, then liquidator shall prepare the list of stakeholders within 15 days from the last date of receipt of claims. From the last date of receipt of claims. List of stakeholders as modified from time to time shall be available for inspection by the person who submitted proof of claim. So these stakeholders can inspect the list of stakeholders who have submitted their proof of claims, and the list of stakeholders shall be available for inspection by the members, partners, directors, and guarantors of the corporate person. So they are also eligible to inspect the list of stakeholders displayed on the website of the corporate person or designated by the Insolvency and Bankruptcy Board of India. Realization of assets, regulation 31 and 32 deals with the realization of assets. So if the corporate person is having assets, then the manner of sale, how the assets can be sold out. The liquidator may value and sell the assets of the corporate person. So valuation is the liquidator may value the assets and sell the assets of the corporate person in the manner and mode approved by the corporate person in compliance with the provisions, if any, in the applicable statute. The asset include an asset, all asset, a set of assets, parcel of assets, as the case may be in relation to the sale of assets. So liquidator may sell the assets subject to the mode and manner approved by the corporate person. Recovery of money dues. Liquidator shall endeavor to recover and realize all the assets and dues of the to the corporate person in a time-bound manner for maximization of the value of the stakeholders. The proceeds of the liquidation and distribution. money, all the monies which the liquidator is receiving and all the monies which the liquidator is expending or paying, the monies to be paid into the bank account. So liquidator shall open, for this purpose, liquidator shall open a bank account in the name of the corporate person, followed by the words involuntary liquidation, in a scheduled bank for the receipt of all monies due to the corporate person. And liquidator shall also pay to the credit of the bank account opened under separate regulation 1 all the monies including checks, demand drafts received by him as liquidator of the corporate person. So if the liquidator receives any checks on demand drafts, he will pay to the creditor of the bank account opened by him, followed by the words involuntary liquidation. Realization of each day shall be deposited into the bank account without any deduction, not later than next working day. So liquidator cannot deduct any amount if he has realized any amount for voluntary liquidation, in involuntary liquidation. Then without any deduction, he will have to deposit into the bank account not later than the next working day. Money in the credit of the bank account shall not be used except in accordance with section 53 waterfall mechanism. You all know. All payments above 5,000 rupees shall be made by check, drawn or online banking transactions against the bank account. So up to 5,000 cash amounts can be paid in cash or more than 5,000 through check, drawn or online banking system and not in cash. Now distribution under regulation 35 deals with the distribution. Then the liquidator shall within 30 days from the receipt of the amount will distribute to the stakeholders within 30 days from the receipt of the amount. Deduction of the liquidation cost before distribution, and he will with the approval of the corporate person, distribution of an asset that cannot readily or advantageously sold due to its peculiar nature or special circumstances amongst the shareholders. He can distribute. And stakeholder shall immediately return the money received in distribution for which he was not entitled. If a stakeholder comes to that I'm not entitled to this money, the stakeholder will have to return that money immediately. Now, tax liability under the Income Tax Act. So when the distributions are being made, the liquidator has opened the bank account, the money has come into the bank account, the assets are being sold, the money is flowing to the bank account. Then when the distribution is being made, then the liquidator has to calculate the tax liability under the Income Tax Act 1961 as per section 2 subsection 22C in the Income Tax Act 1995. Any distribution made to the shareholders of the company on its liquidation, to the extent to which the distribution is attributable to the accumulated profits of the company immediately before its liquidation, whether those accumulated profits have been capitalized or not, shall be deemed dividend. So any profits which are any distribution which is attributable to the accumulated profits means the funds in the reserves and surplus account, they are being standing in the books of accounts of the company, and those will be treated as the deemed if they are being distributed, they will be treated as deemed dividend under section 222C of the Income Tax Act 1995. On deemed dividend, TDS at the rate of 10% is payable under section 194. To deduct and deposit TDS is the responsibility of the liquidator. So I will explain through an example that if the paid up share capital of a XYZ company in voluntary liquidation is suppose rupees 50 lakh divided into 50,000 equity shares of rupees 100. Suppose the amount realized from the assets of the company is rupees 80 lakh. After the payment of liabilities, amount available for distribution to the stakeholders is 75 lakh. Now the 50 lakh is repayment of capital only. The amount above 50 lakh, that is 25 lakh, will be deemed dividend, because this is the this is the amount shown the reserves and surplus or accumulated profits, and it will be treated as deemed dividend as per section 222C of the Income Tax Act, and on such amount the TDS of rupees 2,50,000, that is 10% of the total of the amount, that is 25 lakh, that shall be payable by the liquidator, and it is the duty of the liquidator, responsibility of the liquidator to deduct and deposit that TDS with the authorities. Now, section 46 subsection 1 of the Income Tax Act, if there are assets in the company or capital assets are there in the company, then how to calculate the capital gains of the company, notwithstanding anything contained in section 45. Means this is a non-obstante clause where the assets of the company are distributed to the shareholders on its liquidation. Such distribution shall not be regarded as transfer by the company for the purpose of section 45. And what section 45 says? Any profits or gains arising on transfer of capital asset effected in the previous year shall save as otherwise provided in sections 54, 54B, D, E, EA, EB, F, G, and H shall be chargeable to income tax under the head capital gains and shall be deemed to be the income of the previous year in which the transfer took place. What does it mean? It means notwithstanding anything contained in section 45, where the assets of the company are distributed to the stakeholders on liquidation, such distribution shall not be treated as transfer under section 45. So it means there will be no capital gains in the hands of the company. Now, section 46 subsection 2 of the Income Tax Act 1961 says where a shareholder on liquidation of the company receives any money or other assets of the company, he shall be chargeable to income tax under the head capital gains in respect of the money so received or the market value of the other assets of the on the date of distribution as reduced by the amount assessed as dividend within the meaning of section 2 subsection 22C, and the sum so arrived at shall be deemed to be the full value of the consideration for the purpose of section 48. That is mode of computation of the capital gain for the purpose of computation of the capital gains. So the calculation in the hands of the shareholder is to be done as per section 46 subsection 2. I'll discuss with the example. If the company has posed rupees 100 in accumulated profits and distributes assets worth rupees 250 during the liquidation, rupees 100 of their distribution is deemed dividend and remaining 150 is treated as the capital gain in the hand of the shareholder. This deemed dividend amount of rupees 100 is added to the shareholder's income and taxed, while the rest of the distribution 150 rupees is full value of the consideration for the purpose of section 48 and shall be subject to capital gains tax in the hands of the shareholder. Now, powers and functions of the liquidator means reporting, regulation, 8. Now, submission of preliminary report to the corporate person. So, preliminary report is required to be given to the corporate person, not to the IBP, not to IBBI, within 45 days from the liquidation commencement date. And in this preliminary report, the details are given. That is the capital structure of the corporate person, estimates of assets and liabilities as on the liquidation commencement date on the basis of books of accounts of the corporate person. If the liquidator has reasons to believe that the books of accounts of the corporate person are not reliable, then such estimates on the reliable records and data otherwise available with the liquidator. So he can provide those estimates of assets and liabilities as on liquidation commencement date. Whether he intends to make any further inquiry into the matters related to the promotion, formation, or failure of the corporate person, or conduct the business thereof, and propose plan of action for carrying out liquidation along with the estimates of liquidation cost and timelines within which he proposed to carry it out. So proposed action plan. So these documents are required and these information is required to be given in the preliminary report that by the liquidator. And this preliminary report is required to be submitted to the corporate person within 45 days. The preliminary report, liquidator shall prepare and submit the preliminary report, status report, minutes of the consultation with the stakeholders, and final report in the manner as prescribed under the regulations. Well, and it is prescribed which preliminary report I have already discussed, and final report I'll discuss in my next slides. The liquidator shall make available the aforesaid reports and minutes to the stakeholder, either in electronic or physical form, on the receipt of application in writing and cost of making such report available to them. So, if any stakeholder makes an application to the liquidator for making available the any report, preliminary report, status report, minutes, or the consultation with the stakeholder, then the liquidator can make available to that stakeholder who have made an application in writing, right? And the liquidator will obtain an undertaking from the stakeholder that the stakeholder will not will maintain confidentiality of such report and will not use the same to cause an undue gain or loss to itself or to the other person. So he will have to take the undertaking from the stakeholders before providing that report before providing the aforesaid reports. Ma'am, can we take a short break of 10 to 15 minutes?
Yes, sir.
So we will meet after 10 to 15 minutes, right?
Okay, sir.
Thank you. Thank you, ma'am. ब्रह्मजी जी नमस्कार, कैसे हो? वो मैं 8 अगस्त है जी। हाँ जी, हाँ जी, हाँ जी, हाँ जी। वो सैटरडे होएगा जी, फ्राइडे या सैटरडे, देखो क्या है। Ma'am, shall I start?
Yes, sir.
Okay, thank you, ma'am, thank you. Now, completion of liquidation under Regulation 37. Liquidator shall endeavor to complete the liquidation procedure and submit his final report within 270 days from the liquidation commencement date, where the creditors have approved the resolution under section 59 subsection 3 regulation 31C. It means that if the corporate person is having creditors and creditors have approved the resolution within 7 days, which I have already discussed, then the liquidator shall endeavor to complete the liquidation process within 270 days from the liquidation commencement date, and in all other cases 90 days from the liquidation commencement date, the liquidator shall endeavor to complete the liquidation process. If the liquidation process continues for more than 270 days or 90 days, then the liquidator shall hold the meeting of the contributories within 15 days from the end of 270 days or the end of 90 days, as the case may be, and thereafter at the end of every succeeding 270 days and 90 days from the liquidation commencement date till the submission of application for dissolution of the corporate person. So, this is the duty of the liquidator to hold these meeting with the contributories at the end of 270 days or 90 days. Liquidator shall present a status report including progress in the liquidation, includes the settlement of the list of stakeholders, details of any assets remains to be sold or realized, distribution made to the stakeholders, distribution of unsold assets made to the stakeholders, developments in any material litigation or by or against the corporate person, filing of and developments in the applications for avoidance of undervalued transactions in accordance with the chapter 3 and of part 2 of the code. Reasons for not completing the process within the time stipulated and additional time required for completing the process, that is 270 days or 90 days, which I already discussed. The status report shall disclose the audited account showing receipt and payments of the liquidation since the liquidation commencement date. And the liquidator shall file the status report with the Insolvency and Bankruptcy Board of India within 7 days of the meeting with the contributories. Now, at this stage, the liquidator is required to file Form VL2 with the Insolvency and Bankruptcy Board of India. VL2 includes the details of the meetings of contributories with the reasons for delay in the process, replacement of liquidator if any, Form VL2 to be filed at IBBI site on or before the 10th day of the subsequent month after the meeting of the contributors or replacement of the liquidator. After login at the IBBI site, go to the dashboard, select VL forms, and after that select VL2 and start filling form VL2. Now comes to the final report, Regulation 38, on completion of the liquidation process. Liquidator shall prepare the final report consisting of audited account showing the receipt and payment of the liquidation since the liquidation commencement date. Audited accounts. So all the accounts are required to be audited by the liquidator for showing the receipt and payments since the liquidation commencement date. Means this is the period of liquidation. The liquidator is required to audit the accounts of the liquidation period. Statement demonstrating assets of the corporate person has been disposed of. Debts of the corporate person has been discharged to the satisfaction of the creditors. No litigation is pending against the CP or sufficient provision has been made to meet the obligations arising from any pending litigations. Sales statement with regard to the assets reflecting realized value. What was the realized value of the asset which has been sold? Realized value of the asset, cost of the realization, manner and mode of sale, person to whom the sale has been made, exploration for shortfall if realized value is less than the registered value in the asset valuation report of the registered valuer. So If the liquidator has sold and realized the value less than the registered, then he will have to give explanation. Any other relevant details for the sale. The liquidator shall send the final report forthwith to the Registrar of Companies as well as the IBBI. Liquidator shall submit the final report and compliance certificate in Form H. Form H is prescribed by the IBBI, along with the application for dissolution of corporate person to the adjudicating authority as mentioned under section 59 subsection 7. So after completion of liquidation process, the liquidator shall submit the final report and the compliance certificate in Form H, along with the application of dissolution of the corporate person to the adjudicating authority. So this is the timeline which is given in the of the voluntary liquidation. Declaration of solvency of the directors or partners regarding the solvency of the corporate person. T here means the liquidation commencement date. Before the liquidation commencement date, before 28 days. So it is required to be given by the majority of the directors or partners. Passing of the resolution or special resolution by the members partners about commencement of the voluntary liquidation process and appointment of insolvency professional as liquidator. On this date, the liquidation commencement, the liquidation will commence. This is called liquidation commencement date. So T is equal to 0. Approval of creditors is required to be taken within 7 days from the liquidation commencement date. Means the liquidation commencement date shall be treated on the date of passing of the resolution or special resolution as already discussed. Intimation by the insolvency professional regarding his appointment as liquidator to IBBI within 7 days. Public announcement is required to be made in Form A by the liquidator within 5 days. Notification to the Registrar of Companies and the board about the resolution passed under section 59 3C and 31C of regulation 31C and subsequent approval of the creditors thereto as the case may be. So T plus 7 or T plus 14 as the in case of creditors. Submission of claims by the stakeholders. T plus 30 because 30 days from the date of as mentioned in the public announcement in the the stakeholders will file their claim within 30 days from the liquidation commencement date. Withdrawal or modification of the claims by the stakeholders, T plus 44. Next 14 days, submission of the preliminary report, so T plus 45 days. Verification of claim by the liquidator. 30 plus from liquidation commencement date plus 60 within 60 days. Intimation about the decision of acceptance or rejection of claim within 67 days from the liquidation commencement date. Preparation of list of stakeholder by the liquidator. So T plus 45 means liquidation commencement date within 45 days or within 75 days as the case may be, which we have discussed. Appeal by the creditors against the decision of the liquidator, T plus 81 days. Distribution of proceeds to the stakeholder by the liquidator, date of realization plus 30 days. So from the date of realization, within 30 days, the liquidator will have to distribute the proceeds. Deposit of the amount of unclaimed dividend, and this I will discuss in my next slides. What are the unclaimed dividends and undistributed proceeds prior to the submission of application under section 59 subsection 7, that is dissolution application with the adjudicating authority. Submission of final report to the board and the registrar, T plus 90 days, 270 days as the case may be. Submission of final report along with the application to the dissolution, T plus 90 or 270 days, means you will have to make application to the adjudicating authority for dissolution of the company within this period only. Completion of voluntary liquidation process, T plus 90 or 270 days. Meeting of the contributories and presentation of the annual status report. Liquidation commencement from 15 days from the liquidation commencement date, or 15 days from the end of 90 days or 270 days. Every end of the 90 or 270 days, the meeting of the contributories, the liquidator has to call the meeting of the liquidator in case the liquidation process could not be completed in 90 days or 270 days. Sorry. No application to the adjudicating authority. Section 59(789), where the affairs of the corporate person has been completely wound up and the assets completely liquidated, the liquidator shall make an application to the adjudicating authority for dissolution of the corporate person. He will seek the orders from the adjudicating authority that the corporate person may kindly be dissolved. Copy of order under subsection 8 shall within 14 days from the date of such order be forwarded to the registrar of companies. Copy of the order is required to be filed with the registrar of companies in Form INC 28 of the Companies Act 2013, because all the orders of the of any authority, they are required to be filed with the registrar of companies in Form INC 28 within 14 days from the passing of the order. Unclaimed proceeds or undistributed assets of the liquidation. Regulation 39 deals with these, and it has been substituted with effect from 15th January 2020. Now, board shall maintain and operate an account to be called the voluntary liquidation account with the scheduled bank. So, IBBI shall maintain and operate a corporate voluntary liquidation account with the scheduled bank until the this account is operated as a part of public accounts of India. Till then, the board will maintain and operate with the scheduled bank. Otherwise, it will be after if as and when it would start to operate as a part of public accounts of India, then IBBI will not open this account, and public accounts of India, the unclaimed and undistributed assets will have to be deposited with the public accounts of India. Liquidator shall deposit the amount of the unclaimed dividend or undistributed proceeds along with the income earned thereon till the date of deposit. If any, all the incomes earned on the amount of unclaimed dividend or undistributed proceeds, all these the amounts will be deposited in the CVL account before submitting the application to the adjudicating authority under section 59 subsection 7, or holds any amount on the date of commencement of IBBI amendment regulation 2020, then within 15 days. If liquidator fails to deposit these amounts in the CVL account, then the same shall be deposited along with the 12% rate of interest per annum thereon from the due date of the deposit till the date of deposit. The liquidator shall submit the evidence of the deposit of the amount to the Register of Companies and the Insolvency and Bankruptcy Board of India, and a statement in Form G. Form G has been prescribed for this purpose, setting for the nature of the deposit along with the name and address of the stakeholders entitled to receive the unclaimed dividend / undistributed proceeds. Liquidator shall be entitled to get a receipt from the board for any amount deposited into the said CVL account. Prior to dissolution of the CP, corporate person, a stakeholder who claims to be entitled to any amount which has been deposited by the liquidator into CVL account may apply to the liquidator in Form I. Form I has been prescribed for making an application to the liquidator for withdrawal of the amount. After verification, the liquidator shall request the board to release the amount to him for distribution to the stakeholder. On receipt of the request, the board may release the amount to the liquidator. The liquidator, after making the distribution, shall intimate to the adjudicating authority of such distribution that this distribution has been made. After dissolution of corporate person, a stakeholder may apply to the Insolvency and Bankruptcy Board of India in Form I. After now, the above we have discussed prior to dissolution of CP. Now we are discussing if the CP has been dissolved, if the order of the NCLT has come and we have filed that order with the IBBI and the Registrar of Companies. A stakeholder may apply to the board in Form I for an order for withdrawal of the amount. If any other person other than stakeholders claims to be entitled to any amount other than the stakeholder, shall submit evidence to satisfy the liquidator or the board regarding his entitlement. He will have to submit to the evidence or proof. If the board is satisfied that stakeholder or the person other than the stakeholder is entitled to withdraw any amount from the CVL account, may make an order in favor of that person on the basis of evidence submitted by the stakeholder. Unclaimed board shall maintain the corporate person-wise ledger of the amount deposited or withdrawn from the account. And the board will nominate an officer not below the level of executive officer of the board as custodian of the account, and no proceeds shall be withdrawn without the approval, without his approval, of the approval of the executive director, of the nominated officer. The board shall maintain proper accounts and get the same audited annually of the CVL account and placed before the governing board and shall be forwarded to the central government also. Any amount deposited into the CVL account which remains unclaimed or undistributed, and any income or interest received in the said account after the completion of 15 years from the date of dissolution of the CP, it shall be deemed that there is no claimant and that amount shall be transferred to the Consolidated Fund of India. So there may be circumstances under which adjudicating authority may order for suspension of the voluntary liquidation on detection of fraud or insolvency. Because it is the crux, it is the prerequisite of the voluntary liquidation that the company must be solvent. If there is any fraud or insolvency, then adjudicating authority may order for suspension of the voluntary liquidation. If the liquidator is of the opinion that liquidation is being done to defraud a person and the corporate person will not be able to pay its debts in full from the proceeds of the assets to be sold in liquidation, then he shall make an application to the adjudicating authority to suspend the process of liquidation, and adjudicating authority may pass such an order as it deems fit. Now at this stage, Form VL3 is required to be filed. Form VL3 includes the details of the dissolution application, unclaimed proceeds, realization and distribution made to the stakeholders, pending litigations, if any, detection of fraud or insolvency. Now, VL3 to be filed at IBBI side on or before 10th day of the subsequent month after the submission of the dissolution application of CP or withdrawn or suspension application for the voluntary liquidation process to the adjudicating authority. After logging to IBBI site, go to dashboard, select VL forms. After that, select VL3 and start filling form VL3. And now VL4 is required to be filed, includes the order of dissolution of CP, which includes the details of distribution of proceeds, receipt and payments. Details required in this form are carried forward from VL3 and hence need not be filled again. Order of dissolution passed by the adjudicating authority shall be filed in Form VL4 at IBBI site with ROC in Form INC 28, which I have already told you, within 14 days from the passing of the order or withdrawal or suspension of application for voluntary liquidation process. After login at IBBI site, go to dashboard, select VL forms. After that, select VL4 and start filling form VL4. Preservation of records. Regulation 41 says the liquidator shall preserve copies of all such records which are required to give complete account of the voluntary liquidation process. All records are required to be maintained or preserved by the liquidator. The liquidator shall preserve copies of the records relating to or forming the basis of his appointment as liquidator, including the terms of appointment, handing over, taking over the assignment, initiation of voluntary liquidation process, public announcement, claims, verification of claims and list of stakeholders, engagement of professionals, registered valuers, etc., including work done, reports, etc., submitted by them. So all the copies of records are required to be preserved by the liquidator. All filings with the adjudicating authority, appellate authority, High Court, Supreme Court, whichever applicable, and their orders. Statutory filing with the board and insolvency professional agencies. Correspondence during the voluntary liquidation process. Cost of voluntary liquidation process. All reports, registers, documents such as preliminary report, annual status report, final report prior to dissolution, various registers and books, etc., mentioned in Regulation 8 and 10 in principal regulations, and any other records which is required to give complete account of the liquidation process. These all documents are required to be preserved by liquidator. The liquidator shall preserve electronic copy of all records maintained physically as well as electronically for a minimum period of 8 years, and physical copy of records for a minimum period of 3 years from the date of dissolution of the corporate person before the board, the adjudicating authority, appellate authority, court, whichever is later. The liquidator shall, along with the application filed in subsection 1 of section 59 to the adjudicating authority, provide the details and manner of the preservation of records. So along with the application, the liquidator will have to provide the details and manner of the preservation of record, how he has preserved and how, in what manner he will preserve the records. Now this section as well as the regulations regarding the termination of voluntary liquidation were not in the earlier in the law as well as the regulations. Now these have been incorporated with effect from 26th May 2026. Anytime after the commencement of the voluntary liquidation proceedings under subsection 5, but before the application for dissolution under subsection 7 is filed with the adjudicating authority, the voluntary liquidation proceedings shall be terminated if the following conditions are satisfied. After commencement, but before the application for dissolution of the corporate person with the adjudicating authority, within this period, if the following conditions are satisfied, then the voluntary liquidation shall be terminated. Conditions are: number 1, if the members of the company have passed a special resolution for terminating the voluntary liquidation proceeding, and where the company owes debt to any person on the date of resolution under clause A, the creditors representing 2/3 in value of such debt have approved the resolution passed under clause A within a period of 7 days of such resolution. Means members have passed the special resolution, and if the company is having creditors have also approved the resolution within 7 days, or such other condition as may be specified. then the liquidator shall intimate the board and the registrar, IBBA and the registrar of companies regarding the special resolution under clause A of subsection 5A within a period of 7 days of passing the resolution or subsequent approval of the creditors under subclause B as the case may be. And subsection 5C, a voluntary liquidation proceeding shall be deemed to have been terminated from the date on which the liquidator intimates the register of companies, and such termination shall bring the term of the liquidator to end and have such other consequences as may be specified. What does it mean? It means the voluntary liquidation shall be deemed to have been terminated from the date on which the liquidator intimates the register of companies. How the intimation will be made to the register of companies in form MGT 14. So from that date, the voluntary liquidation proceeding shall be deemed to have been terminated. Now the regulation 42 has been added for termination of voluntary liquidation with effect from 2nd June 2026. The resolution referred to in clause A of subsection 5A of section 59, that is special resolution, shall provide for rationale for termination of voluntary liquidation proceedings. Treatment of liquidation costs, how the liquidation cost will be paid, and a declaration that termination will not result in prejudicially affecting the interest of any stakeholder. This declaration will have to be given in the resolution. For the purpose of clause C of subsection 5A of section 59, the liquidator shall intimate. Here what is written? Intimate. Intimation is given to the adjudicating authority along with a report in form J regarding termination of voluntary liquidation process, accompanied by the statement that due process for termination of voluntary liquidation process has been followed, means special resolution has been duly passed, and in that resolution, rationale for termination, treatment of liquidation cost, and declaration that has also been given. The termination of voluntary liquidation process is not initiated to defraud any person, and corporate person is insolvent. And that termination of voluntary liquidation is not initiated to defraud any person, and the corporate person is solvent. Where the conditions specified in clause A, B, C of subsection 5A of section 59 are satisfied, the liquidator shall within 7 days of passing the special resolution or the approval of creditors as the case may be intimate the board and the registrar of companies along with the report prepared under sub-regulation 2 regarding termination of the voluntary liquidation process. Upon termination of the voluntary liquidation process under subsection 5C of section 59 of the code, the appointment and term of the liquidator shall stand terminated. The liquidator shall cease to exercise any powers or functions under these regulations, and no further action shall be taken under these regulations in respect of the voluntary liquidation process. Now, before concluding, I want to discuss forum J with regard to termination of voluntary liquidation process. Now, this is forum J, that is intimation for termination of voluntary liquidation proceedings, and it is to be given. It is to be intimation. This is only an intimation to the adjudicating authority, concerned adjudicating authority with which where the jurisdiction falls. Intimation for termination of voluntary liquidation proceedings, the name of the corporate person, and it is to be given by the insolvency professional, means liquidator, an insolvency professional enrolled as and registered with the Insolvency Bankruptcy Board of India having registration number. I'm citing the liquidator for the voluntary liquidation proceedings of corporate person. I hereby submit this form for termination in accordance with Section 59 of the Code and Regulation of the Liquidation Process Regulations. Following documents to the extent applicable are annexed with the form. Now, what documents are required to be annexed with this form? A copy of declaration from majority of the directors of the company in accordance with clause A of subsection 3 of section 59. Copy of documents mentioned in clause B of subsection 3 of section 59 means documents, the financial statements of last 2 years, record of business operations, and the valuation report, if any. So these documents are required to be annexed with the declaration. Copy of special resolution of the members of the corporate person. Copy of resolution of the creditors of the corporate person. Copy of resolution passed by the special majority of the partners contributories. Copy of the resolution of the creditors of the corporate person. Proof of notification sent to the board or the registrar of companies. Copy of public announcement of the commencement of proceedings. Copy of preliminary report. Particulars under Regulation 12. A copy of list of stakeholders in accordance with Regulation 30. Details of avoidance, transaction, fraudulent or wrongful trading, if any. Particulars of sale or realization and distribution thereto, including the following: realized value, cost of realization, if any, manner and mode of sale, person to whom the sale is made, and any other relevant details. Audited accounts of the liquidation showing receipt and payments pertaining to the liquidation since the liquidation commencement account, means audited accounts of the liquidation period. A statement demonstrating that assets of the corporate person that have been disposed of during the process, the debt of the corporate person has been discharged during the process, details of any pending suits or proceedings and status thereto, a copy of the resolution or approval under clause A and B and subsection 5 of section 59 as the case may be. This is the last step. Copy of the report under section 42 subsection 2, that is form J. I hereby declare that due process for termination of the voluntary liquidation proceeding has been followed and termination of voluntary liquidation proceeding is not initiated to defraud any person and corporate person is solvent. Signature of the insolvency professional. So this is required to be intimated. So this is required to be intimated to the adjudicating authority. Here is only intimation to the registrar of companies, to the Insolvency and Bankruptcy Board of India and the adjudicating authority, and filing the same with the registrar of companies, and from that date on the date on which, or the day on which you have intimated to the registrar of companies, the voluntary liquidation shall be deemed to have been terminated. And how you will intimate to the registrar of companies? By filing forms, by filing this special resolution in form MGT 14. And I'm not able here to understand with the amendment in these regulations that here is only intimation given to the IBBI, registrar of companies or the adjudicating authority. There is no order is required of adjudicating authority for termination of the voluntary liquidation. And how the registrar of companies, when you will file form MGT 14 with the registrar of companies, if it is not will not be a STP document, then the registrar of companies will change the status of your company from under liquidation to the active status. Otherwise, every person will have to approach to the registrar of companies for getting the status changed from under liquidation to the active status. And if the liquidator will intimate to the adjudicating authority with all these documents, what the adjudicating why and adjudicating authority what will the adjudicating authority will do with Form G? So this has to be debated. And adjudicating authority, when will anything will file with the adjudicating authority, or whether the adjudicating authority will pass an order on that Form J or on that intimation or not, that is also not given in these regulations. So, to my mind, the adjudicating authority will adjudicate on Form J and will pass appropriate orders. And I think it should be the termination of the voluntary liquidation shall take effect from the date of the order of the adjudicating authority. That order must be filed with the Registrar of Companies Form INC 28, and then the status of the company will be changed from the under liquidation to the active status. So, to my mind, because when these provisions were not in force, we used to file an application with the adjudicating authority for withdrawal of voluntary liquidation process. I have also done one matter, and there are also the decided cases of the NCLT for withdrawal for termination of voluntary liquidation. So process was the same, which is given in these regulations, but with the authority of the or with the order of the adjudicating authority, the termination of voluntary liquidation process was there. But now here only an intimation is given to the registrar IBBI and the adjudicating authority. So from that date, it is deemed to have been terminated. So benefits of the voluntary liquidation are controlled exit from the market in a controlled manner, minimizing disruptions and ensuring an organized distribution of assets, transparency, involvement of creditors and shareholders in the liquidation process, thereby avoiding potential conflicts, efficiency. Voluntary liquidation streamlines the winding up process, enabling a quicker resolution compared to traditional methods. Stakeholders protection. The interest of the creditors, shareholders, and the other stakeholders are safeguarded through regulated and fair process. Legal recognition. The IBC provides a legal framework for voluntary liquidation, offering legitimacy to the process. So this is all about the voluntary liquidation process. Thank you so much for listening me patiently. Thank you. Thank you so much. Madam, are you there?
Yes, sir. Shall we conclude now? Sir, I am here only. Shall we conclude now?
Thank you everybody. Thank you very much for listening me patiently. Thanks a lot.
Thank you, sir. Thank you.
Mr. C, sir, are you here?
Yes, ma'am.
Okay, actually there were some technical issues, so I was logged out. Thank you very much, sir. for such a wonderful session and sharing your experience and giving your valuable time. Thank you very much, sir. So
Thank you.
kindly share the material of the session.
Thank you, ma'am. Thank you so much.
Yes, sir. Sir, kindly share the PPT.
Yes, I'll send,
Thank
ma'am.
you. Thank you, sir.
Thank you, ma'am. Thank you.
Thank you, sir.
Thank you, sir. Thank you.